Good afternoon, everyone. I see still people coming in, so I'm going to give it 1 or 2 more minutes, and then we will start. Yes, well, good afternoon, or maybe even good morning or good evening to some of you, ladies and gentlemen. And my name is Petra Hielkema. I am the chairperson of the European Insurance and Occupational Pensions Authority. And on behalf of all 3 European supervisory authorities, so also ESMA and the EBA, I can say that it gives us a great pleasure to welcome you here today at this high-level conference on financial education and literacy. And for those of you who are already familiar to our work, you will all know that above all, we are here to protect consumers. And while good supervision and regulation both underpin a fair and strong financial service sector, one that is to the benefit of consumers, there is also an important role for financial education and literacy in ensuring that people understand their overall financial situation, that they can make informed choices when buying financial products. And this is why, when the 3 ESAs were created in 2011, the EU legislator mandated us to coordinate education initiatives of national authorities. Financially literate people are more aware of where they own risks and which products will help to mitigate those risks. This entails a lot more than just being able to interpret a statement. It is rather about having a broader understanding of your own finances, including not just the situation today, but also what will be needed in the future. In contributing to education programs, focusing on clear, understandable information, and looking at how products are developed and also distributed, sold to consumers, as well as whether or not these products actually offer value for money to consumers, all 3 European supervisory authorities place a great importance on the work in financial education and consumer protection. And so the next logical step in our work is today's event, our first conference on financial education and literacy. Under the theme of how we can enhance the financial education of consumers in financial services, over the next 2 days, we have brought together a range of excellent speakers who will share their expertise with us on different topics related to financial literacy. We will cover areas like how we can empower citizens through financial literacy and how financial education can support financial resilience, in particular for vulnerable groups. We will also look at the challenges faced by consumers from digitalization, challenges such as cybersecurity and also scams. And we will look at what consumers need to help them feel comfortable in a green transition. Moreover, we will discuss on how we can move forward on the agenda after this conference, ensuring that information shared today leads to results in 2022 and beyond. I'm sure you will enjoy the different sessions, and I very much encourage you to actively participate. Now, to officially open this conference, I'm delighted to welcome Her Majesty Queen Maxima of the Netherlands, the United Nations Secretary General's Special Advocate for Inclusive Finance for Development, or the UN SGSA for short. As Special Advocate, Queen Maxima is a leading global voice on advancing universal access to and responsible uses of affordable, effective, and safe financial services for positive outcomes. Your Majesty, the floor is yours.
Thank you very much for this kind introduction, ladies and gentlemen. Financial health has always been an important topic, but today it is even more urgent. Europe, like much of the world, is facing growing inflation. In December, prices in the Eurozone rose by 5%. Across Europe, an overwhelming majority of people expressed concern about the impact of inflation on their financial well-being. Already before that, 40% of people said that they had less than 1/5 of their monthly incomes left after paying household bills, leaving no room for a rise in costs. The unpredictability of the pandemic also creates more uncertainty for millions of people and their families. Many have struggled to stay afloat since the start of the crisis. 4 in 10 state that they are poorer today than before the pandemic. In these environments, good financial health is critical. The key issue is, how can we enable people to successfully manage day-to-day finances, build resilience, and work towards long-term goals? People with good financial health are more resilient and better equipped to seize opportunities. A financially healthy population can relieve pressure on government safety nets overall. So, if we want to rebound quickly in times of crisis, financial health is an essential tool. This is a responsibility that concerns us all. It should be a common goal for governments, regulators, private sector, financial sector actors, and NGOs. I have listened to many personal stories, men and women who almost collapsed because of problematic debts. In the Netherlands, we have a program called Debt Lab that fights taboos and helps reduce over-indebtedness. We have learned that given that it takes people an average of 5 years before they seek help, we must be on the lookout for early warnings. The first red flag in the Netherlands is often when a person stops paying health insurance premiums, but this might be different in other countries. The sooner people get help, the better. But of course, prevention is the best medicine. I'm encouraged by the commitment and effort of the European supervisory authorities to advance financial education and literacy. The ongoing pandemic has driven new interests in financial well-being across Europe, and we should seize this opportunity to keep momentum going. I do not pretend to have all the answers, but I do have some suggestions on how to go about this. My first suggestion is financial health should be the main goal for financial education initiatives, and this progress must be measured. Financial education needs to contribute to better financial lives. It is how we influence financial behavior that actually counts. And to be sure there is impact, we need to have a good view of people's financial health. So, measuring financial health is a first key step. Perhaps you are already collecting data that provide you with useful insights. But for those unsure where to start, there is good news. My partners, including the OECD and World Bank, have done tremendous work to pioneer this effort by releasing guidance for policymakers. I invite you to review our recommendation and join us. My second suggestion is design more effective interventions for financial education. Financial education at schools is just not enough. We must meet people where they are. Over 20% of people worldwide learn about money management from YouTube. 18% of Generation Z get financial advice from TikTok influencers. This reliance on social media will grow for the foreseeable future. So it is important that we learn how to use these channels properly. We also must ensure that there is sufficient focus on the underserved, including the poor, the young, and the women. Many of them face stumbling blocks that we need to consider, such as pay and employment gaps for women. My third suggestion is assess present financial products and services along with their effects on financial health. Today, online and offline, consumers face a barrage of advertising to buy things with financing offers such as buy now, pay later deals. We should ask ourselves, do these offers really help people manage their expenses, or do these tactics lead to overspending? High-risk cryptocurrency and day trading have also become increasingly popular among people hoping to become rich. Young, inexperienced investors are extremely vulnerable. So, how do we ensure that consumers understand the terms and risks? How do we encourage financial institutions to change practices that maybe generate income but unfairly hurt low-income consumers? In the end of the day, these practices will not only hurt consumers, but can also harm businesses in the long run. Businesses are in a unique position to influence people's financial behavior for the better. There is great potential in offering products that improve financial health. Saving products that nudge people to achieve goals are just great examples of this. Ladies and gentlemen, I will conclude by noting that while we have a long road ahead of us, the time is now to put financial health at the top of our agendas. This will enable us to help Europeans build better financial lives and create more resilient economies. I urge you to identify good practices, share ideas, and join forces. Let us support each other in this great effort. Thank you so much.
Yes, well, thank you, Your Majesty, on behalf of the 3 European supervisory authorities and indeed of all the participants, very much for your insightful and inspiring remarks. It is clear that we need to make financial literacy a priority to foster better financial resilience and financial health among our citizens, and in particular the vulnerable ones, the young people and women. Thank you very much for opening our conference, and I look forward to discussing this topic further and bringing results. Thank you very much. And now with that, I would like to move to the next speaker. And again, I can say that I'm very happy and delighted that I have the honor to now welcome another lady that I admire a lot and that has already done a lot in the field of financial inclusion, Commissioner Marie McGuinness. Welcome. She is the European Commissioner for Financial Services, Financial Stability and the Capital Markets Union. And the Commission has spoken often about her support for financial education, and in fact, recently, last week, on the new financial education competency framework developed jointly by the European Commission on the OECD's International Network on Financial Education, which we will also hear about more in the next panel. Commissioner, welcome, and the floor is yours.
Well, thank you very much, Petra, for the invitation and for being involved in an event which can change lives for the good. And I think that's why we are all involved in this. So, of course, to Her Majesty Queen Maxima for your very pragmatic and practical opening remarks. And again, I take good note of what you've said. I think we all know that the financial world has a reputation for being complex and distant. Maybe there is this sea of opaque numbers, jargon and acronyms, and I think we all know we are guilty of using them, and indeed they're used against us. So we're aware of the vision perhaps of the financial world. On the other hand, finance is a fundamental part of everyday life. You know, from a simple purchase of a coffee in the morning to much bigger financial decisions around saving for retirement or buying a house. We constantly have to make these financial decisions And we, of course, want to make the right ones. So I put it very simply. We really do need to talk about money. And what I want to achieve, certainly working with others and with yourselves, is I want our consumers to know the right questions to ask, and more importantly, to have the confidence to ask those questions. So I think when you need to be able to talk about money, we have to really understand what does it mean, I suppose, this whole area of financial literacy and financial education. So a really big thank you to ESMA, to EBA and IOPA, because I think working together, you're making today happen, and it is a very significant event. So it really is important, and it's very, very good to see that financial education is so high on your priority list. I want to work directly with you to demystify finance. I want a financial system that is not impenetrable and abstract. And I want our citizens to know that the financial system is there to work for them and not the other way around. And this is a two-way street. We should educate citizens, consumers, but we also need to pay attention ourselves to the jargon and indeed the paperwork and the complexities in finance. But I want to also be very clear that demystifying finance does not mean deregulating finance, and that's a core issue. Empowering our citizens, our consumers, does not mean removing consumer protections. So two very important messages. Looking at why we need to improve financial literacy, and Your Majesty really addressed this so well. I'm looking back at my own formal education some time ago, a long time ago, including a diploma in accounting and finance. And you know, back then the focus was on very cold figures, return on investment. There wasn't a mention of issues like sustainability, these considerations around a company's impact on biodiversity or climate, or indeed about how you ensure and respect human rights in our supply chains. The course I did was very much paper-based, and at a time where home computers were big and were just becoming available, but still very rare. Now, I know I'm aging myself, but actually there's been a dramatic change in how we communicate. Look at us, our communications today, and how we access the financial system. And of course, there's a dramatic change around what are the issues important around, for example, sustainability, which today is at the very heart of the financial system. If you look to the technological innovation, this means that many of us keep this powerful computer, if not in our pockets, certainly in our bags. And this gives us all access to many financial products, including very complex ones. So in this new digital world, I think financial literacy has never been more important. But unfortunately, as we all know, financial literacy levels remain too low. Only 1/4 of adults could answer questions about simple and compound interest in the latest OECD International Survey of Adult Financial Literacy. And beyond interest, simple concepts are important too, like the risks of missing repayments and the dangers of relying on credit card finance. Again, looking beyond recognizing these key concepts, being able to recognize financial risks is really important. For example, crypto promises huge returns driven by social media buzz. But as we've seen only very recently, it can be volatile and very volatile. So what came up came crashing down with real consequences for those who bought at the peak and who may not be able to afford to cushion themselves from these losses. So again, technology, like many things, has opportunities and risks. New apps, new banks, fintech companies offering new ways to pay, to open accounts, or indeed to invest. Now, all of this can be really positive and can build a more inclusive financial system. But there is also the risk of excluding people who might not have the digital skills to keep up with the fast pace of change. And there's a particular danger for older people, because older people are amongst those with lower levels of financial literacy too. So there's a double-edged sword here, because financial literacy itself is not evenly distributed. And again, it was mentioned by Petra that young women, older people, and lower income groups are among those with lower levels of financial literacy. And I think there is a correlation between lower levels of financial literacy and lower income, and we need to address that and acknowledge it. Low levels of financial skills impact negatively on individuals and families. So we can do better, and in fact, we must do better. A financially literate person can use finance to meet their goals in life. They can weigh up different options. They can assess information and make the choices that are right for them. And indeed, they know how to access information, which is another key point. But there are wider benefits of financial literacy beyond the benefits for the individual. You know, the industry itself would benefit from consumers who can articulate their needs and desires, who know about different products that might suit them. And then we have broader political goals, like the Capital Markets Union. These would definitely benefit from consumers who can use their savings to invest in financial markets. And again, the benefits for individuals, for the economy, and for the wider society would be substantial. Now, of course, this is the challenge we're talking about today. How do we turn our words into action, our commitment into real results? So firstly, here in the Commission, we're very much committed to taking action to support the financial education of consumers. And yes, last month, the Commission, in partnership with the OECD and its international framework, or rather network on financial education, published a new financial competence framework for adults. It lays out what you need to understand and how you need to act in key areas like borrowing, saving and investing, and digital finance, sustainable finance and financial resilience are fully integrated into this framework. It will help build a shared understanding of what it means for adults to be financially literate among our member states, our national authorities, educational institutions, industry, and of course for the very individuals. It also provides a way to measure proficiency levels. And I do believe that the launch of this framework is a really big step forward, but our goal remains boosting financial literacy across the European Union. So of course, the framework is one thing, but the results will only emerge when we put it into practice. So again, here the Commission and the OECD will work together to support uptake across member states. And here we are very much counting on national competent authorities, coordinated by the ESAs, to help spread the word about the framework across the member states. And over the coming months, we'll talk to member states and stakeholders about how the framework is being implemented. And we're starting, I believe, on the really next important step, a financial competence framework for children and young people. And our aim in this area is to publish with the OECD this framework next year. Really, for me, the earlier we start financial education, the better. Indeed, the earlier we start any form of education, the better. Because children and young people, they do make financial decisions, and indeed for their lives, they will continue to do that. Sometimes it's a very basic decision about, do you spend now or do you save in maybe a digital piggyback, but indeed a physical piggyback? This is still something that children do. And when you're a bit older and earning money in a part-time job, you're looking at what you might do with your earnings and indeed how you allocate your spending. So you're looking at your budget. And really, these are simple messages, but sometimes we need to talk in simple messages for an understanding about finance to emerge and to remove it from the complex zone that it sometimes is placed in. And, you know, when I'm thinking of young people, they're getting messages from social media about what they should do with their money. And I'll give you an example we're all aware of. You know, social media in particular on Reddit led to the massive mobilization of retail investors to invest in GameStop. There are countless accounts and influencers pushing investments like crypto and non-fungible tokens, NFTs. TikTok is a growing platform for financial advice too. But the big question, how do you know how to separate the good from the bad? And I think this is a key to answering and unlocking the ownership of individuals around their financial health and well-being, is have the skills to decipher information that is coming at them constantly in short bursts. So I think really beyond all of this, by starting with young people, we will help to lay the foundations for financial education, for the big decisions and the small decisions that people have to take during their lifetimes. And really, I think if you have a rock solid foundation, this is important for Europe, and I think it's important for our member states and for individuals. But for financially literate individuals to be able to make their money work for them, they need a financial system that works in their interests. They also need a stable financial system that's well regulated and not a source of problems for the wider economy. And on that, we have thankfully come a long way since 2008. We have made our banks and insurance companies stronger and more resilient to shocks. And we've also responded to newer developments. So we're regulating digital finance to take advantage of the opportunities while managing the risks. So for example, we're putting in place rules for cryptocurrencies with the markets in crypto assets regulation. If I look to retail investment, a financial system that works in the interest of consumers means one where financial information is clearly and correctly disclosed, where advisors provide high quality and trustworthy advice, where consumers can access products that match their needs, where products are no more complex than they need to be, and where supervisors promote good practices and have the power to intervene when necessary. Financial education can empower individuals, but it should not be used to shift responsibility solely onto the consumer. It can and must go hand in hand with consumer protection. And here the European Union has a strong track record of consumer protection. For example, consumers here in the Union have the right to a basic bank account. They also have the right to compare payment account fees and switch providers. And they have the right to repay their mortgage early. They're protected from payment fraud thanks to strong customer authentication. They enjoy the same pricing when transferring euros abroad as they do within their home country. And we're always bringing in new measures, such as the right to bring your no claims track record for your car insurance with you if you move to another EU country. But the financial world, as we all know, is changing rapidly. And we need to make sure our consumer protection rules are fit for the challenges ahead. So, for example, a public consultation on EU mortgage credit rules is underway until the end of February. And overall, this directive has helped raise the standard of consumer protection and harmonise mortgage lending practices across the EU. We want to hear how well the current rules are working, particularly given challenges arising from digitalisation and the transition to a green economy. We're also developing an open finance framework, and this is about making better and more conscious use of data. Open finance is part of the EU's digital finance strategy, and it has the potential to spark new, innovative products that are personalised to the individual consumer. At the same time, consumers will keep control over their data and how it's shared. And our aim is to put these rules on open finance in place by 2024. And of course, we're looking at a digital euro. A digital euro could combine the safety of central bank money with the efficiency of digital payments. It could be a secure, quick and easy tool for daily payments. But of course, we need to thoroughly examine how it might be designed, distributed and used. Together, the ECB and the Commission are reviewing a broad range of questions around a digital euro. And some of these, for example, are how could you maintain the privacy of users? What impact could it have on financial stability or market integrity? And how would we ensure it meets consumer needs? So in closing, financial education must not be used as an excuse to weaken consumer protection. However, financial education can empower people to make financial decisions that work for them. The launch of the Financial Competence Framework for Adults is an important milestone in improving financial education in the European Union. And of course, the framework is not the end goal. In order for it to help improve financial literacy across Europe, it needs to be widely used. And so for those who are joining us today, if you haven't done so already, I'd like you to look at this framework. It's available on the European Commission website. And again, to policymakers, academics, NGOs, consumer associations and members of industry, and indeed the public who may be joining us today, think about how you can use in your financial education policies and programs this framework, because it is a public good. Because we need to work together if we are serious about improving financial education in Europe. And my last remark is that I think in the last 12 months, perhaps, because of COVID and all of the changes it has brought to our lives, there is more of an awareness of the need for financial literacy. And indeed, I think there's an appetite amongst our member states and citizens about this issue. So together, I think we should grasp this opportunity to drive forward our efforts so that citizens are empowered and that their money works for them. And that is how it should be. So thank you for being able to speak on this event today. It means a lot to me, as it does, I think, to everyone who's participating, because I think together we can actually make a difference.
Yes, thank you very much, Commissioner. Thank you very much for these energizing words on behalf of all three supervisory authorities. Thank you for joining us today and sharing your thoughts on financial education and literacy, and particularly on the framework that is, I think, such a wonderful contribution to the discussion we need to have today, but we also need to have beyond today in Europe. And I do hope that that discussion will start today, or even go deeper today through the 4 panels that we will have. So thank you very much. And thank you very much for saying that we not only must do something, but we can do something. And let's discuss what that is. And that brings me then to the first panel discussion that will be led by Natasha Cazeneuve. Natasha is the Executive Director of ESMA, and she will introduce the panel. And the panel will discuss financial education and the Capital Markets Union, including this financial education competency framework. And with that, Natasha, I'll give the floor to you.
Thank you very much, Petra, and precisely following on from what you said earlier in your excellent introduction, I would also like to welcome you all to this joint ESA high-level conference on financial education and literacy. As you will have understood, we consider this as a very high priority. So after the extraordinary contribution of the UN Secretary General Special Advocate Queen Maxima, thank you again, and the inspiring words by our Commissioner McGuinness, it is my pleasure to open the first session that will discuss, as Petra has just said, financial education and capital markets union. That is one of Europe's key strategic priorities. In this session, we will hear from highly knowledgeable experts, speakers that are going to explain what are the challenges ahead and practical ways to meet the objectives set by the European Commission to make the EU a safer place for individuals to save and invest. And also we heard, how can we empower citizens to make those informed decisions? But before we open the panel and to kick us off in this discussion, we have the great pleasure of welcoming today Florent Messi, who is the head of Consumer Finance, Insurance and Pensions Divisions of the OECD Directorate for Financial and Enterprise Affairs. And she is also Executive Secretary of the OECD International Network on Financial Education. Anne will share with us insights on what we have discussed already, at least only mentioned, the joint financial competence framework that has been developed jointly by the Commission and the OECD International Network. Florent, a warm welcome to you on behalf of all of us. Thank you very much for joining us today, and the floor is yours. We don't hear you, Florent. Give her 30 seconds to reconnect. Fortunately, we still don't hear you. Someone from the technical teams of the EBA maybe to contact Ms. Messi to see if we can fix this?
Yep, I will contact her bilaterally.
Okay, thank you. If I may ask you to bear with us just a couple of minutes, and otherwise I will introduce our panel that we'll discuss after the introductory speech, but I would like to give Ms. Messi a few minutes. Thank you. Yes, indeed. I think I'm going to use these couple of minutes to introduce the participants to the panel who will be speaking right after Ms. Messi's introductory speech, if that's okay. Perhaps you can open your cameras if you are already connected, and I hope that is the case. We have excellent speakers that are going to join me to discuss the link between financial education and the Capital Markets Union project, and see how we can debate about how we can make that link and maybe foster more retail participation in capital markets. I will introduce the panel a little bit later, but to discuss with us today, we have Tanya Panova from the European Commission, who is head of the Capital Markets Union unit, and who was prior to that in various positions in the Commission and also served in the private office of Vice President Valdis Dombrovskis. She was responsible already back then for the Capital Markets Union project. I don't know, Tanya, if you're already here. We also have Jean-Paul Servet, chairman of the Belgian Financial Services and Markets Authority, who will be with us. Jean-Paul is a very important figure in the international fora as well. He is vice chair of IOSCO, and he is also chair of the IFRS Foundation Monitoring Board and co-chair of the monitoring group and chair of IOSCO's SPACS network. And for those who know Jean-Paul, he's also a member of many international supervisory bodies in the financial sector, including ESMA, ESRB, EIOPA, and he also teaches at the University of Brussels. We also have Alexandra Machinska, who is the Executive Director of Better Finance. She's a member of the European Commission's Financial Services User Group, so she will be bringing a very important consumer perspective to the table. She advises the Commission the preparation of legislation and policy initiatives. Alexandra is also part of the EC Consumer Policy Advisory Group, as well as Vice Chair of EIOPA's Occupational Pension Stakeholder Group. Thank you for coming, Alexandra. And last but not least, Tanky van der Werf, who's the Director General of the European Fund and Asset Management Association. He's a member of ESMA Securities and Market Stakeholder Group and also chair of the Financial Data Exchange Templates Steering Group. And Tanky is also a member of the board of the International Investment Funds Association and importantly sits in the committee of the European Parliamentary Financial Services Forum. So I thank you all for joining me, and we will be having this discussion in the panel, but I think that now Ms. Messi is connected. So with that, I will give you the floor back, Ms. Messi.
It seems not to be connected.
Have you been able to speak to her? Shall we start the panel?
I would say yes, please maybe start the panel now. Be better.
Okay, then let me maybe just say a very, very short remarks to introduce the panel, and apologies to everyone for this technical glitch. Hopefully we'll manage to bring Ms. Messi back into the conference very soon. But first, I just wanted to say a few words. It's very difficult to speak after these extraordinary speakers to make a link, but just to introduce the discussion of the panel that we will have in a second. So I see she's here. Ms. Messi, are you connected? Unfortunately, we still don't have the sound. All right, then I will continue. So as we have understood and we have heard, financial literacy is the necessary starting point for any individuals to make financial decisions, and of course, a very important building block in creating and building of capital markets here in the EU. And even though we saw a recent uptick, Europe still has a relatively low level of retail investor participation in capital markets if we compare us to other economies, and this deprives the European companies from long-term investments and importantly prevents consumers from benefiting from investment opportunities that are offered by capital markets and from appropriately saving for their own retirement. EU household savings actually remain predominantly allocated to bank deposits rather than capital markets instruments. Financial education can and should play a critical role in this context, as people are, if they are financially literate, they are more likely to be able to take advantage of the possibilities that are offered by capital markets. And so while it is arguable that financial education is a matter of public policy that needs to be tackled primarily as a long-term objective by governments, there clearly is a role, and it was said today, and we're ready to pick it up, for European and national regulators in developing new initiatives that could help foster financial literacy of consumers and in coordinating and complementing initiatives that are taken at national level in this area. So here what we will try to do, we heard that it's important that we can empower citizens. We heard also that we should be concrete and try and think about practical solutions and good practices. In the panel that we will be discussing today, we will try to tackle 4 questions. First, how can we make the EU, the promise from the Commission, a safer place for individuals to save and invest long term? How can financial education actually contribute to the development of capital markets union and support consumers' participation in capital markets? What are the challenges and concrete solutions to improve financial literacy? And how can the European supervisory authorities and NCAs contribute to reach this goal? Those are the questions we'll try to address in the panel. So I am going to pause here and I'm going to ask the panelists if they can maybe switch on their cameras so that we can kick off the panel discussion, if that's okay. And hopefully while the panel takes place, I hope Flora and Messi can then share with us some insights on the OECD's competency framework right afterwards, if that's okay.
That's fast.
I don't see my panelists on the screen. See. Okay. So I suggest we start with you, Alexandra, if that's okay. Can I please ask you to give us the consumer's perspective, and can you explain to us what, in the different initiatives that you have seen, what are the weaknesses? What are we trying to overcome in financial literacy initiatives? And do you think that the current environment and, for example, the digitalization, does that require an enhanced commitment? Should we step up our efforts in financial education? What is your take, Alexandra, please?
Just a couple of words about better finance. I don't know if everybody in the audience is familiar with what better finance is. So we are a network of consumer and investor organizations, and we represent the interest of financial consumers and individual investors. And we are, of course, a great supporter of the CMU project. And we do think that financial education and especially financial literacy has a big role to play there. For us, financial literacy is this fundamental knowledge of this fundamental financial concepts, but also the ability to make financial calculations. And we do studies that say that not always financial education and financial literacy provides good consumer outcomes or good changes in consumer behavior. So normally this conventional wisdom would tell us that the more informed consumer is a better consumer with better consumer outcomes. And especially when dealing with complex products and services, and definitely financial products and services are complex ones, consumer knowledge is of particular importance. So financial education programs are of course likely to be a popular remedy, but we really should ask ourselves if financial education and literacy really allows consumers with more of it to achieve better outcomes. And we have seen recent studies, one also from Ireland, where financial education is important, and what also policymakers are really concerned with pension adequacy. It's a problem not only for Ireland, but really in Ireland, the state pension is going to provide some basic protection against poverty, but not really an adequate level of pension adequacy. And the study I'm referring to has found very little evidence that people, consumers, and pensioners with high level of financial literacy are more likely to have various forms of supplementary pension cover. So we should really consider very carefully where we should focus really our efforts in order to really boost what the Queen and also the Commissioner have referred to as the financial health of consumers and investors. So I would say that if we really want a safer place for individuals to save and invest long term, we really need rather a mix of different measures. And we cannot really rely on financial education alone. What would be this mix of measures that would make the current landscape a safer one for individuals to invest? we would put at the first place really access to unbiased advice. And I think the comparison to financial health made by the previous speaker is an excellent one, because in fact, consumers, people, citizens, EU citizens, whenever they have problems with their health, that they can rely on professionals, independent, having their best interest at heart, and advising them how to get to this ideal level of health. And this should be also happening with the financial health. I very much liked what the commissioner said about demystifying the area of finance, and I think demystifying the area of financial advice is one of those where we should really focus our efforts on. And we should also try to let people understand what is advice, what are different types of advice that they have right now access to, and also let them understand the different conflicts of interest that possibly are there, and then make them decision if they are willing or not to transfer some of their wealth to the professionals that would be able to help them. The second measure that is extremely important to get to a safer place for people to invest in would be better product design. So also access to simple products with built-in safe, a good default option that you could call in a way financially literate options. So we also know that the enthusiasm of consumers to take even free courses on financial education, financial literacy is limited. So I really think that we should also do more in terms of really product design, and then financial education. And really for very good financial education, we should focus, I think, on the very early age. And in schools, we should have financial mathematics, information about capital markets. And then when it comes to financial education for adults, we have two possibilities. We have the possibility at the point of sale. And here there is this problem that I already mentioned in the first measure, so the access to unbiased advice. And we also need to remember that we have studies that are showing, and also one of the European Commission studies that show that at the moment that consumers, investors realize that the advice they are getting is in a sense conflicted, they are getting the advice from not independent advisors, they are much less likely to follow up on the advice given. So we need to bear that in mind. And then the second place when we can get financial education is at the workplace. So we here would really very much recommend, and we are very much aligned with the recommendations from the high-level forum on capital markets union, where the recommendation for more promotion and information about the employee share ownership programs was given, because we think there is a very good way for people, for adult EU citizens to get acquainted, especially with the information about capital markets. And the third and last point, that any financial education initiatives that are being carried out should be evaluated, and they should be also supervised by independent bodies to ensure that they are really given, that the consumers and investors are really given good and helpful information. So this may be at the beginning. Thank you.
Thank you very much, Alexandra, for this comprehensive perspective. So if I understand correctly, financial education absolutely necessary, but not the end of the story, need to be complemented with important advice, and has to be looked at also financial education on school level for kids, but also considering adults at the point of sale and at the workplace, and also better product design. Very, very interesting. Thank you very much, Alexandra, for sharing these initial thoughts. I'll now turn to Tanya. Thank you, Tanya, for being there. So I don't know if you connected at what time. We had some technical issues, but so I have introduced everyone, and thank you very much for joining us. May I immediately ask you to share with us your thoughts on how do you see financial education, serving the objective of the Capital Markets Union, and what are the Commission's priorities here?
Good afternoon, Natasha. Good afternoon, everyone. Sorry for being slightly late. I haven't been able to listen to all the remarks made by Alexandra, but what I've heard when I was joining actually matched very much what I was going to say. because to begin with, I wanted to say that the topic of retail investor participation that we're considering in the context of the Capital Markets Union is actually fairly complex, and that retail investor participation cannot be forced. It can only be supported and encouraged, right? And for me, just like for Alexandra, it requires a set of preconditions for it to be done properly. So what does it mean? For me, it means that the relationship between individuals and capital markets, are fairly complicated, and capital markets, they often encompass risk. We know that. Risk needs to be valued. This risk is valued in prices of products. And insurance and guarantees, of course, are possible, but they also imply lower remuneration. Now, often investors, retail investors, when they approach capital markets, they want to have the best of two worlds. They want to have high returns and no risk. And we know that economic theory basically suggests that this is not possible. So that's where actually financial literacy comes in, because individual investors need to have basic understanding of what capital markets are, how financial products are priced, and what can be expected of price movements in different situations. So without this basic understanding, retail investors actually run the risk of quickly becoming quite disillusioned with capital markets, and possibly even withdraw completely, which would be very, I think, negative outcome for all of us. So understanding finance, understanding its basic elements, is an essential component for building trust between individual investors and financial market intermediaries. So now the objective of the financial literacy cannot be to make everyone into a professional investor, right? At the same time, the world of finance remains fairly complex, and it is getting increasingly so with the digitalization trend, with sustainability being incorporated in it. So intermediaries can provide advice, and I understand Alexandra talked about it, and should provide advice. They should also provide with information, retail investors with adequate disclosures. But in order to make sense of all of this, people need to have basic understanding. They need to basically understand the basic concepts such as equity or interest rate, right? So now financial education, obviously, and Alexandra said this, is not the end in itself. It does not obviate the need for other important ingredients of successful retail investor participation. That means, we need effective investor protection framework. So this is indispensable. People need to be protected, and they need to have access to adequate recourse mechanisms. So this is essential. We also need efficient distribution networks that render competitive outcomes for retail investors in terms of fees, in terms of the product choice that is being offered. We also need adequate product governance, obviously, and existence of non-complex, cost-efficient product options, etc., etc. So the list can be long, but at the same time, what is important to show is that financial education is a fundamental, but on its own insufficient component or ingredient of successful and sustainable, because what we need is sustainable participation of retail investors in capital market. In terms of Commission priorities, very briefly, and I'm sure you've all listened with great interest to the presentation by Florent, with whom we cooperated on the project of financial literacy competence, financial competence framework. So obviously the EU mandate, the EU competence in this area is fairly narrow. We can support member states, we can work with them, but we cannot do things instead of them. So it remains to be an important role for the member states to play to increase, to raise the levels of financial literacy of their citizens. And I think what is important is to also say that a very big role is for private actors in this respect, but we may discuss this in a bit more detail at a later point. Now, the development of the financial competence framework, the so-called dictionary, as we call it, of the basic concepts in key areas of finance, aims at precisely that, and aims at supporting member states' efforts, but not replacing them, because it will remain to be for the member states to implement this, to take this on board in national strategies when developing training programs or training materials or courses. And ultimately, we hope that it will also allow the member states to exchange best practices, because we obviously learn the best from each other's mistakes and success stories. That would be it for me.
Thank you very much, Tanya. And no, we have not heard from Ms. Messi yet. We're still hoping that she can connect and make her comments at the end of this panel. But thank you so much, Tanya, for giving us this perspective. So you mentioned national authorities and national initiatives. So I'm going to turn to you, Jean-Paul, to give us your perspective as a strong regulator, very invested in initiatives to help foster retail participation, protect retail investors. So from your perspective and your experiences, both in IOSCO and at the FSMA, what from your perspective are the biggest challenges when you try to have effective financial education and financial literacy initiatives?
Thank you, Natasha, for your kind words and comments that I don't deserve. Yes, indeed, I think that you are right. I think that we are well known as being a strong regulator, but at the same time, strongly believing, I would say, in all initiatives about financial education. So if you would like to ask me what are, I would say, the key challenges if you want to be successful in promoting financial education, what are in fact the game changer? Three main aspects. Three. To be a doer, to be a lobbyist, okay, and to have a balanced approach. First aspect is to be a doer. Let us be clear, you can have all national, international strategy program. If you don't have people working, like in an army, for that, no chance to be successful. That's the reason why I thought some years ago that first of all, I had to be personally involved with a strong team. And maybe I would say Belgium is a quite interesting country. Capital of Europe, different kind of people, 3 official languages, Dutch, French, and German. Financial education is not necessarily translated with the same accent when I have the pleasure not only to speak English, but also to speak Dutch or French. See? So we have to adapt ourselves to the audiences and what are the expectations, not from us, not from the European Commission, not from national regulator, not from ESMA, not from IOSCO, but from our fellow citizens. So you must be a doer. You must be a lobbyist. It's quite strange when I tell it, but I am sure that there are many colleagues from ESMA and outside ESMA from IOSCO. And I think, Natasha, and you know that also, that the majority of our colleagues don't have a legal basis for that. So that's therefore that, Tatiana, I am very happy with the new CMU. And I would expect from the European Commission that at the end of the day, with the support of the 2 other co-legislation, the Parliament, we would have a strong legal basis for that. If not, it remains very difficult for that. And I know the reaction of many of my colleagues, also inside ESMA. They'd say, okay, I would like to do something like Jean-Paul. Not that I'm the best one, but I have a strong legal basis for that. But I don't have the legal basis at national level, and there is no initiative from, I would say, the European Commission. And that's the reason why, Tatiana, I was very happy that your commissioner, who took the floor some minutes ago, was the first one, the first commissioner to publish a paper saying CMU needs financial education. Wow, that's a game changer. It would be better, if I may tell you that, Tatiana, if we could have a legal basis at European level. It only exists for one directive, credit, a mortgage credit. There is a link with financial education. Of course, it's too limited. So it means that you have to lobby. In my case, we decided, I proposed to the government 11 years ago to switch to the Twin Peaks model. At the same time, I can tell you, no problem, it's not, if it's a public secret, I lobbied very strongly at the level of the government to say, I need a legal basis for that. It was not the case before, when I used to be a single regulator. And I received a legal basis for that, okay? And it's financed by the people that we are supervising. It's about money as well. And then I had to hire people and to think about the language. That's my third message. To be a doer as regulator, to believe in that, to lobby, and last but not least, proportionate approach. I was there, I was just appointed after the start of the, I would say, subprime crisis, just in time. So it means that I had the pleasure to go very frequently to various parliaments, lessons to be learned from the crisis. One mistake would be to say, okay, I only believe in the fact that there are only lessons to be learned from the bankers, the life insurance, and so on from the crisis. Of course, there are strong messages which has been delivered in times and things are changing. That would be a mistake. Another mistake would say, no, I refuse to be, I would say, a tough supervisor, strong, and I only believe in the responsibility, in the involvement in everybody to, I would say, to increase his own capacity to better understand financial literacy. We need to have a balanced approach. And that's what we are doing in Belgium for more than 10 years. At the same time, to be a cop, proud to be a cop, and proud to be a financial cop. People knowing me know that I think that's reality. But at the same time, I'm the first one to say, okay, we need also to be helpful, to have an added value. For this, I would say, you need to think about financial education. And I'm sorry to say that to Tanguy, but Tanguy, you know the kind of discussion I like. If the message that we would convey as financial supervisor, member of ESMA, EOPA, EBA, and so on, and of course IOSCO, to say, okay, I would like to speak only about UCITS, or about life insurance, about banking products. I would say sophisticated instruments which are only available in Belgium. And Belgian people like this kind of instrument, which are diversified, of course, that's not the problem, which is only, I think, in the portfolio of 2 or 3% of the 11 million people living in Belgium. That would be, I would say, a missed opportunity. We need to think about the language, and it's not only about knowledge, but also about attitude and behavior. And that's what we promote. First of all, by thinking about a nice name. So in Belgium, the financial education program managed by the FSMA, I will come back in the second round of the panel, it's called Wikifin. We check the copyright, huh? No problem with that. Wikifin. Oh, funny. Oh, what does it mean? Wikifin, fine. We also have a Wikifin lab. Oh, fine, a lab, not a museum. Okay? The objective is not to learn everything about the stock exchange, financial instrument, MiFID, even if it's very useful, MiFID II, IDD, and so on. The objective is to be helpful for the people and to reach consumer when they make financial decisions. And just think of certain moments in life when people are taking important decisions. We must be there when people buy a house, have children, marry, but also divorce. A very painful moment, both for human beings, but also from a financial point of view. When they retire, when the students go to the university or in high school, one of the most popular of our website, which is visited by 3 million people. That's fascinating for us as supervisor. I am not Madame promoting a cryptocurrency. I am just a cop, but I can tell you 3 million people visiting, it's absolutely unbelievable. So it means that what we are saying is matched with the needs. And we are speaking about day-to-day life. How to make a budget in order to rent, I would say, a room for students, what we are used to call in Belgium, in Brussels, a cot, one of the most popular parts of our website. So it means to be there, I would say, for moment of life event in the day. And that's the reason why we decide to build our first website about which information do you need when you will divorce, when you will marry, when you get retired. Day-to-day, I would say, aspect. And it's also important to be present when people don't expect that you are there. For instance, during the last week of March, we will organize, I would say, the 8th edition of the Money Week, sponsored by the Queen of Belgium, Queen Mathilde. What we decide to do with the support of the Queen and many ministers, it's not to organize that in our premises. We was there in station. We were there in in malls, in shopping centers. Never where people think that they would have the possibility to discuss a financial cap. We are there on the 21st of July, more or less, or 14th of July in France, or 4th of July in the US. So we are kind of competitor for the Belgian army trying to attract new soldiers. We are there in order to explain, do you need information about your financial situation? Do you think that you are at ease? So a kind of Socratic reflex and know yourself. Well, if you think that you don't feel at ease, please don't hesitate to consult us or other stakeholders. That's also a public-private partnership. These are, Natasha, I would say, the key aspect. And if you agree, I would like to come back in the second part of the panel about the experience in Belgium.
Thank you so much, Jean-Paul. And I think it's time precisely to turn to Tanguy to tell you, so from your perspective in the private sector, why is this important to asset managers? What do you see? Why do you see this challenge as being important for the market for financial education?
Thank you, Natasha. Good afternoon to everyone. Allow me to be bold, because I think that when it comes to financial education, we need to be bold. And to me, the main challenge to improving the level of financial literacy is our level of collective ambition and determination. I think the importance of financial education has been downplayed for many, many years. It has been seen by many as an attempt by the industry to avoid new regulations, or some other people were saying it doesn't work. Now, nowadays, fortunately, there is a recognition that financial education, while insufficient, and we do agree it is insufficient, it is not sufficient, but it is necessary. And this is a major improvement. And we heard the commissioner, we heard Tanya, all those references to the OECD and the Commission's work. The determination of the Commissioner McGuinness is hugely welcome. But this is not going far enough. I think financial education should not be seen as just necessary. It must be seen as absolutely critical. And in my opinion, a sense of criticality is clearly missing. Now, this is because, for example, the retirement savings gap is increasing in many of our countries. According to recent studies, 1 out of 3 EU citizens is not financially resilient, which means they are not able to withstand a financial shock. Now, this is very scary if you consider that retirement will sooner or later constitute such a shock for many people. So not only the retirement savings gap is increasing, but also wealth inequality. And this can lead to social unrest and further fragmentation of our societies. So financial education is one of the best investments in people's future. So there is a need to be far bolder and far more determined. And there is probably no better time to be bold and determined as today, as we know, inflation is high, interest rates are still very low, and depositors, therefore, are losing purchasing power. So improving financial literacy is not a nice to do, it is a must do. That's my first message. My second one is that the second challenge that I see is our collective mindset. I think too many of us still think in terms of investor protection, whereas we should also think in terms of investor empowerment. And I think that was mentioned by the commissioner. By overprotecting people, you simply put them off, you discourage them from investing. The main risk today is to take no risks at all. And also, I think we should take a critical look at the regulatory framework that we have put in place over the years and see whether it can be simplified. According to some studies, if something is perceived as complex, it will be perceived as higher risk, which will then result in a lower willingness to invest. So we should fight against unnecessary complexity, looking also at the content, the length, the timing, and the format of all those disclosures. In other words, I think that improving financial literacy should go hand in hand with a simplification of the regulatory framework that we have. And the upcoming retail investment strategy is an opportunity to address some of those issues, but also to see whether the current framework that we have is not unnecessarily biased towards bank deposits. So to your question, Natasha, why is all this important for asset managers? But obviously, for us, increasing financial literacy is important, as it will help investors better understand the characteristics and the benefits of the solution we provide. It will help investors make better use of the disclosed information to compare products, ask the right questions, and also make informed decisions, including when it comes to ESG. But it is also important for us as there is a critical need to increase the level of retail participation in capital markets. The reality is that far too few European citizens are invested in capital markets. And higher levels of financial literacy will help turn depositors into investors. Now, frankly, whether they invest directly in shares, in bonds, or via investment funds is less important. Recent studies show a negative correlation between the level of financial education and the percentage of financial assets held in bank deposits. So we need not only to create more awareness around basic concepts such as indeed risk return, compounding, inflation, diversification, as mentioned by Tanya, but also, and this is key, we need to find ways to activate these depositors and turn them into first-time investors. We need to find ways to nudge those people into action. And this you can achieve by, for example, increasing the level of awareness of the opportunity cost of doing nothing, and also of the retirement savings gap I was mentioning earlier. And to increase such awareness, EFAMA has launched last year the European Retirement Week, together with Insurance Europe, Pensions Europe, Better Finance, the European Banking Federation, and several other European trades. And the idea here is to have an annual opportunity to debate and discuss pension policies and ways to increase financial security in retirement. And I hope, Tanya, our hope is that the Commission will make it part of the official European calendar, a bit like we have the European Green Week, for example. So to conclude, I would like to say that while improving the content and the format of all those mandatory disclosures is necessary, it will do very little, if anything, to get those people who have never invested in their life and are not considering it to start investing. Now, we tend to focus here in the Brussels bubble mainly on people whose mind is already made up that it may be worth investing, whereas we should do far more to target all those people out there who are staying away from investment. We need to overcome their inertia and their reluctance by increasing their awareness of the cost of doing nothing and by improving their financial literacy. The sad reality, these are my last words, Natasha, the sad reality is that the welfare state in most of our countries will most likely no longer be able to provide for people's needs forever. So we need to increase financial literacy. It's not necessary, it is absolutely critical.
Thank you very much, Tanguy, for that very powerful message about the need to mobilize people who are not at all invested, and also to think about ways of being clearer, of finding ways of also empowering for a critical look at what's going on in the market. So thank you for sharing those thoughts and why it's so important that we raise to the challenge. I see there are very high expectations. So in the second round, I would like us to be focused on giving practical experiences, comments on what we can really do practically, and thinking about who should do what a little bit. And I should have said it at the outset, we want this to be interactive. There are a few comments coming in the chat, but they're quite long comments, so I'll try to read through them and make sure that we can pick them up in the discussion so the panelists can respond to those. In the meantime, I'm going to turn for the second round of questions to Tanya. And can you tell us, Tanya, what are you expecting from public or private sector, and what role, especially given this is a joint ESA conference and we're keen to try and support, what role do you see for European supervisory authorities and national authorities in this area?
Thank you very much, Natasha, for the question. I've listened with great interest to Guy's very passionate intervention. And I have to say, I found myself in agreement with lots of things that he was saying. And I was very happy to see that the private sector considers that this is fundamental, this is critical, because to be honest, I think that while member states' work is going to be important, and we will probably see lots of initiative at state level, I think the role of private actors in fostering financial education is going to be paramount. Because this is the tricky part, because ultimately, and Tanguy, I think you mentioned this, we're talking about adult education, right? We're not talking about children education. Children are easier to train because we've got schools, we've got channels, right? For adults, what are the appropriate channels? And you're right, we are going, we are reaching out to those who might not want to be educated, who don't care about investment, who don't care about capital markets. How do we not only reach out to them, because this is the first issue, but how do we also persuade them that they need to be trained? Because this is where the main challenge is when it comes to adult education, and not education for kids at school, where you've got teachers and children have to sit through classes. So that's a fundamental difference, I think, between training kids and training grown-ups. And there I would like to also make some linkages to what Jean-Paul said in his speech, because he did mention the crucial points in the lifetime of individuals. I think he mentioned opening a bank account or divorces. I'm not sure I agree with divorces, but there are instances in life where people need to make financial decisions. And at those moments in time, people get exposed to a particular set of actors. So actually, very frequently, there are private intermediaries that are interacting, or private actors that are interacting with adults at those points in time, be it the first employment, or the first decision about mortgage, or opening a bank account. So there are private actors that are, if you wish, those interlocutors to adults going through those moments in life. So the importance of mobilizing those private actors at those crucial points in time for adults, for those potential retail investors, would be key. Because ultimately it's about triggering the interest of those individuals to learn more about opportunities that capital markets offer, and making sure that that interest is matched by the amount of information and quality and substance of information that is being provided to them, is going to optimize in a way and lead to the best outcome. So we don't only need to deliver education, we need to make sure that people are willing and receptive to education, because only making sure that people want to be educated, we can educate them and improve the levels of education. So in that respect, I see a huge role for private stakeholders, for private actors. Now, of course, the member states have an important role to play. You know, we're talking about national strategies, we're talking about, you know, developing national campaigns, national, you know, material, different sorts of materials, training courses, etc., etc. All of this goes without saying, obviously. The role for supervisors is also quite important. I think what is being done by the ESAs now, the repository of digital financial education best practices, this is very important, because this supports the efforts of different supervisors, perhaps some with a bit more know-how, if you wish, in this area than others, allowing supervisors to learn from each other, to see, you know, how far you can go, where you can be effective. And as I said before in my previous intervention, it's about also learning from each other's mistakes, you know, things that didn't work perhaps in the past, and where you don't need to focus your efforts. So where to focus the limited resources that supervisors in some member states have in order to maximize the impact. So that is going to be very important. And of course, you know, the network of supervisors under the auspices of the ESAs has a lot of potential in this respect. You know, helping each other, sharing best practices, sharing know-how, perhaps learning from each other. This is where I think potential is the largest.
Thank you very much, Tanya. I'm going to try and change a little bit the order. And Tanki, I'm going to come straight back to you, because we have a few comments that I would like to share with the panelists, because it's a bit challenging to look at them in detail. But generally, the comment is to say it's not only educate for investors to be able to understand, but also so that they're able to challenge also the information that they're going to have at that critical eye. At the same time, it was raised that there's this issue about a potential detriment if there are losses or scandals, and then you lose trust much quicker than you actually build it in the first place. And then there was a question, that's why I'm coming to you, Tanguy, and perhaps Alexandra will also want to intervene on the cost of advice. So saying the more the product is complex, the more, despite education, the investor will need to be accompanied with advice, but advice is costly. So how do we deal with that? There's also a comment on digital literacy, but I think that will be picked up in the next panel. So Tanguy, I turn to you. Do you want to comment on any of these points, particularly on the cost of advice? And perhaps at the same time, if you can pick up further insights on what you think are relevant initiatives that could be helpful, picking up maybe on what Tanya just said on her expectations from the financial sector. Thank you.
Yes, thank you, Natasha. Maybe first starting by the trust. I think that indeed, if you want to, again, I think financial education is not an objective per se. You know, it's a means to an end, and I think the end is to get people more invested in markets for their own benefit. And I think that for that we also need people to trust financial markets and financial service providers. And so I think that clearly we need to increase financial literacy so that people better understand markets and products, but also we need to make sure that financial market participants themselves, you know, behave properly. And I think that, you know, there have been cases in the past, you know, whether Wirecard, Enron, Leonard Hospi here in Belgium, which had a dramatic impact, a very negative impact on all retail investors. So people are simply not coming back to the markets because of poor corporate governance or poor behaviors by financial markets participants. And this includes, of course, also asset managers, banks, and the like. So that's my first point. I think the cost of advice, I think we can always keep focusing on cost. I think for me, I always look at cost and benefit. I think what is important is to receive high quality advice and fair advice. Advice is needed. I think it was Tanya mentioning, saying that, you know, the objective of financial education cannot be to turn all of us into financial experts. No, the objective is to get to a level where people understand what they are being told and can make better informed decisions. But the advice is needed. Good advice has a price, but I think that the real debate is far more, okay, how much do I get in terms of quality for that price? What about the regularity of the advice? Those kind of issues. And finally, on the role of the financial market participants, I think there is a very important role for all financial market participants who have direct contact with the investors, with the consumers. So those are the distributors and the advisors. So I think that will be on another panel. And so I think banks or whoever is facing the customer has a very important role to play. But again, on advice, there is this whole debate. I think we should focus on the cost, but also I'm prepared to pay for high quality advice. The question is, how good is the advice I'm being given? And how regular is the provision of advice? These are the key questions, as I see it.
Thank you very much, Tanguy. And so, Alexandra, this question is definitely for you in the chat. How could we find a way to involve consumer organizations in all initiatives regarding financial literacy? And apparently the speaker is clearly in favor of this, because this would help us be sure that it will probably be designed and delivered in the interest of consumers. What's your take on what consumer organizations should play in these initiatives, and maybe also the point that was made in earlier interventions about being able to measure progress? So we all see it's a priority. We all want to mobilize and make this real and concrete in terms of actions. How could we actually measure the effectiveness of our initiatives? Alexandra.
Thank you. I've been making a lot of comments also as the previous speakers were talking, and also I was looking at the chat. So I have many comments. So if I go over my time, just stop me. When it comes to the involvement of consumer organization, I just said it also at the very beginning. I think it's really necessary. So especially if you think about financial education initiatives and programs done by market participants, and exactly because of the issue of trust in the financial services area and market, and because of the trust being extremely low, either supervisors, national authorities, or independent consumer organizations should have a role there. So they should be either invited to cooperation or should have some kind of a supervisory role, maybe over those kind of initiatives. Also, in order for consumers to feel more secure that the information provided is something that can be valuable for them, and it's not just selling another product, maybe. When it comes to measuring the effectiveness of financial education initiatives, it's extremely important. For me, a financial education project is just like any other project. It should be managed. And of course, you cannot manage something that you cannot measure. So for me, a good financial education program or project is a project that has inherently built into it an evaluation component. And it should have also clear goals and some measurable key performance indicators. And I would be really happy to know about more successful financial education programs that have been evaluated. Maybe if some of the participants also know, they could also put some links in the chat. It would be extremely interesting for me. And I would also like to refer to the very important question about the cost of advice, because I very much agree that right now, many consumers do not want to make their own financial decisions. And it's also because of the trust issue. It's also because the products are complex. They sometimes fear the consequences of choosing the wrong option. So they should have access to advice, to good, independent, preferably advice. And I also think that what would improve the issue with the trust to financial services and the willingness to invest would be at least partial ban of inducements. You could call them, they are called inducements, but probably for majority of individual investors, this word does not say much. So you could call them commission or kickbacks, as the previous chair of Europol was calling them. Because we also know from the evidence, for example, from the Dutch market, is that this ban, and also from the European Commission study itself, this ban resulted in consumers being better informed, having a lower cost product. So it did have really positive impact on the situation of consumers. Therefore, we are also looking forward to the study of the European Commission on inducements and suitability. So those consumers who want to pay for advice, they should have the possibility to do so, and they should have access to independent advice. But there are also consumers who don't want to pay for advice. And in this case, we also think that policymakers should really make the world easier for consumers, and they should be also focusing a little bit more on defining more carefully and simply the financial choices that people have to make. And here, again, I would like to refer to what I said at the very beginning. So to have really built in very sensible, cost-efficient default options into the design of financial product. So even that the do nothing option is also financially literate and is safe for consumers. And just one comment about the retirement and the pensions gap problem, because this is a super important problem. Tanguy referred to it. We did have this retirement week to promote the information about the need to save for retirement. And this is exactly something that I think financial education has really a lot of impact to make, and especially on children, because I think that education, also financial education, is really about forming good habits. So saving would be one of them, but I think we should go much further, and instead of just focusing on saving as such, you should also provide information to consumers that apart from saving, you should be really looking for value for money, on where you save, on what kind of product you spend your money, and understand what is your expectations of return, what is your risk willingness. So there are many different concepts that consumers should be aware of, but this don't work and won't work unless people are really financially literate in terms of financial numeracy. So this, I think, there is also a lot of important work still for the education system. Thank you.
Thank you very much, Alexandra, for this very clear intervention and a very clear direction of where you stand. There is an interesting question for you, Jean-Paul, that has come up in the chat. So I'm going to turn to you. We only have a couple of minutes because I would really like to give the floor to Ms. Messi, who has been patiently waiting for her time to speak. I think the connection is now correct. But Jean-Paul, before we close our panel, I would like to give you back the floor to maybe give us a bit more insight on the practical experience you have on the ground, and to answer this question that has come our way, which I'm only the moderator, so I will not attempt to respond. Do you see a need for a stronger mandate for the ESAs to promote financial literacy? And so with that, Jean-Paul.
Well, already my answer. I think that I'm well known to repeat myself more or less at every meeting of ESMA boss. Yes, of course, you need to have a new legal basis. And I'm very happy to see that Commissioner McGuinness will do that. When I see the kind of element of language that she decided to convey, I am sure that it will be the case. And just for information, Tatiana, it would be a pleasure for me to welcome you, Commissioner, in our Wikifin lab, which is 200 meters far from DG FISNA and 400 meters from the well-known Berlaymont building where she works. So it will be a pleasure to give some evidence about, I would say, this very fascinating experience that we have about financial education. But I think at the same time, I would say, Natasha, that there need to be an interesting interaction between what we need at European level in experience. We know that it's part of the well-known subsidiary principle that some aspect will still be managed at national level or even at regional level, subnational level. And therefore, I think that my key message to your answer is to say that we have to learn from each other. That's what I think I was able to understand in my capacity as vice chair of IOSCO and also as chair of the IOSCO regional committee with 50 member states on board. And we learn from each other. It means that we have to think, and that's what I learned from other people, and that's the reason why we decide to follow this approach in Belgium. First of all, and not necessarily in line with other previous speakers, to start with financial education as early as possible. To quote Benjamin Franklin, and investment is knowledge, in knowledge pays the best interest. So the earlier we invest in this, the greater the return. One example, during the 7th edition of the Money Week in Belgium, 80,000 children will play with all our, I would say very funny tools. 80,000. From time to time, I don't believe in my own figure, but that's a reality. 80,000 for a small country like Belgium. So it means that there is support for that, and hence the importance of focusing on children and young people. Young people, that's, I would say, the focus group for our Wikifin lab or financial education lab. Second aspect, which is absolutely critical in order to be successful, is to approach not only certain groups, but to try to speak their language. And that may be a real challenge for us as supervisors. We are very good when we have to draft new regulation. MiFID 1, MiFID 2, MiFID 3, MiFID 4, UCITS 17, Basel number 82. That's what we are used to do. And then when I have to ask to my staff, could you try to draft that in plain English, French, Dutch, German? That's a very interesting exercise about management. And they are able to do that, let us be clear, because they believe in that. And then I would say, and I will finish with that in order to give the floor to the next speaker, to, I would say, Florent, that you know for a long time, because of scale, we are also partners with the OECD. There are two pillars for me. The first pillar is when to see where we have to be. The second, when we have decided to be. The first pillar, where we have to be, I would say. On the internet, we start 10 years ago a website called Wikifin. 4 million times. It's incredible to see that. We have a lot of, I would say, simulator. How to compare the different current account on Belgian market. It has already been used more than 500,000 times. The second part of this first pillar, where we have to be. Well, we have to work with our first ambassador. And who are the ambassadors who are never paid by us? These are the teacher of you children, dear panelists, dear member of the audience, 900 people. These are the teacher of you teenagers. They are interested in it. In Belgium, we decide to be there. So it means that the financial education program, Wikifin, yes, it's now part of the, I would say, the binding financial education program for all Dutch-speaking students when they are teenagers, with a reference to Wikifin. That's very important. For instance, we also decide to give the capacity for free to all teachers in Belgium to download materials about financial education. At the end of the day, this material has been downloaded more than 80,000 times. And then to decide to be where we have decided to be on a voluntary basis, outside the building of the FSMA, Money Week, and other public-private parts, but also inside. We decided to open a Wikifin Financial Education Center, free of access for all class of teenagers. That was the objective. Let us be clear. I took some risk. I only received negative advice from some people called consulates, Dutch-speaking people, people from Wallonia don't like to go for Brussels. It's a too big city, only 1 million people. It's too far. There is no chance. You are crazy, Mr. Saver. Well, after 1 year, even in COVID time, it's fully booked all the year. Of course, take into account all COVID regulation. And more than that, many teachers are asking to come back with a second or third class. So it means that there's a matching between the offer and the demand. Because we are used to working with our ambassador, we have a lot of interaction with the teacher of the, I would say, who are on the front line in order to educate the new consumer who are already able to use credit card, debit cards, their phone, their iPhone, their mobile. It means the teenager. And I think for this, we have to think out of the box. Let us be clear. I was not convinced by a fully fledged digital journey. That was the choice made by my staff. Maybe I'm too old. They told me no chance to reach a teenager. That's the reason why I think that's the only one financial education system. Sorry for the arrogance, but that's, I think, the true, and I'm the first one to share our material with everybody and other regulators at international level, at national level. That's the reason why we decided to combine a digital journey with live interaction with a guide, allowing a feedback with visitor to experiment with different day-to-day financial situations. The objective is to be critical, not to learn, I would say some book, no, to see how you react and how to sharpen your critical mind and confront them with their personal choices and tools, I think, and tools they make as a citizen. There is also about democracy for that. And it also helps visitors improve their knowledge and better understand, I would say, certain basic financial mechanisms. That, I think, really, but let us be clear. It's not only something that we are doing as a strongly believer and supporter of financial aid, that's also what we are doing as regulator. We decided in Belgium to launch a banning of 2 complex structural projects, and there was some reference in the chat. Yes, indeed, I strongly believe that we have to avoid 2 complex products for the distribution to John and Mary in the street, to retail investors. The trust is about also the capacity to understand what you can receive from a financial service provider either when you buy a product and we are asking for a fine. So I would say it's a holistic, comprehensive financial education to take some lessons to be decided to do. For instance, our banning, there was no legal basis at all. And then we have the pleasure to see that it's no copy and paste at European level. So yes, you must be able to accept to take some risk because you believe in this new world. Thanks for that.
Thank you, Jean-Paul. And let me thank all the panelists for sharing your insights. This was very instructive, very concrete. And clearly, Jean-Paul, we take the invitation to visit the lab in Belgium. But I would
Welcome.
thank again everyone for your engaged contributions. Thank you for all the comments in the chat. There's plenty of information there for those who are interested. And thank you, Ms. Messi, for bearing with us, for your patience. We're very much looking forward to listening to you. So with no further ado, let me give you the floor immediately. Thank you.
Thank you very much, Natasha, and I hope that now you can hear me properly. I have to say I'm all with Jean-Paul. I'm not fully digital. I wouldn't have been muted if we had this meeting in person. Anyway, I think it was really good for me to listen to all of you, or at least what I could hear about, because it was kind of music to my ears. I have a few slides to share, but I have to say that I've been working on consumer finance, especially financial literacy issue, for 15 years. So I was really inspired and comforted by obviously a Majesty and then Commissioner McGuinness' speech, really emphasizing the importance of financial literacy for financial well-being. But at the same time, I take all your point, and I think for the OECD, it has clearly always been the case that financial literacy is extremely important to empower citizens, to empower micro and small entrepreneurs, and this is typically more important in period of crisis. So for me, it is not that surprising that financial literacy is put in the spotlight, because what our crisis is doing is testing the ability of people to adapt to change. And typically, if they don't have the skills, if they don't have the knowledge, if they don't have the competences, they cannot adapt to changes. And of course, there were a multiplicity of changes due to the pandemic. Loss of income in some cases. Now, Her Majesty referred to increased inflation, which will create another area of risk and difficulty for consumers that may not have experienced inflation in their life. So a completely different financial system. So financial literacy is really important for that. At the same time, and obviously I will focus on financial literacy and the framework that we developed with Tanya here, I want to say that financial consumer protection is equally important. And obviously, the Commission has been extremely strong on making sure that consumers are protected. At the global level, the OECD has developed high-level principle on financial consumer protection 10 years ago, so after the last financial crisis. And as I'm speaking about financial literacy, we are currently reviewing those principles to make sure that they make sense in the new digital environment. They make sense with sustainable finance. They make sense with the increasing need for financial resilience. And typically what we are including in those new principles, they used to have 10, we will likely have 12. And I can share with you that we'll have a principle that will focus on access and inclusion and to finance. So that's less relevant perhaps for the EU zone, but more importantly, a principle on quality of product and suitability of product. So back to many comments that were made on whether products are simple enough, products are suitable for consumers. So I think this should be the initial point. And then obviously we want consumers to be well educated. And here I take Tanya's point, and sorry, I'm speaking too much at the beginning, but I'll go quickly through my slide. I think it was a very interesting discussion. Financial education should be demand-driven. If you are trying to push some knowledge into adult population, obviously it is not going to work. I mean, it might work for children, but certainly not for the adults. And with that, I will challenge myself and try now to share my slides with you. I'll see if I am actually lucky enough for this to work. Let me know if you can see those slides. Natasha?
Yes, we can see them perfectly.
Fantastic. And my insights were really about looking at the joint EU OECD INFIF financial competence framework for adults in the EU. And I was planning to go through all of this. I'll be quicker on that because I think a lot has been said already. But obviously, I wanted to give you a little bit of background on the context. A lot has been said on the limited financial literacy of adults. And I think, again, we need to put that in perspective with the current pandemic. Some of the background work that has been done by the OECD and its International Network of Financial Education, which was created actually just after the last global financial crisis in 2008. And obviously, I want to focus more on the financial competence framework for adults in the EU, which I do believe with the Commission and obviously Tanya here, that it is really a very good foundation for EU member states to start thinking in terms of effective financial literacy policies, but more importantly, it is making financial literacy very concrete for any other kind of stakeholders, the private sector, but also the civil society, and making sure that any programs on financial literacy is trying to achieve similar objective in terms of the competence of citizens in the EU zone. And then a few words about next steps, but a lot has been said on that. So I'll be relatively quick, so bear with me.
Could you please go into slide mode so we can see the slides better, please?
Sorry? It is on slide mode, actually.
No, it is not.
Yeah, exactly. Not really.
Is it better now? Is it better or not?
For the time being,
try slideshow.
Yes, please.
Yes, this is where I was, but okay, I'll try. Is it better? So is it better or not?
No, it's not, but let's just proceed then. Anyway.
Yes, I am really sorry. On my screen, it is full screen, so I'm not sure what I can do more. It looks like technology is indeed challenging me today. So I hope you can see enough on your screens. So this slide is really showing, we like to start with evidence, obviously, at the OECD and Commission McGuinness actually mentioned this survey, which has been collecting information on the level of financial literacy of adults around the world. You see on the right-hand side of the slides some scores for EU member states. So the absolute target is 21, and for us, this indicator of financial literacy is a relatively minimal level of financial literacy. And you see that the average across OECD countries is for respondents to achieve a score of 13 out of 21. So it's more or less 62% of our target score. And you see on the right side that some EU member states are doing a bit better, some are doing are below the OECD average, but overall, I would say that it is quite a low bar globally, but also in the EU zone. So certainly a lot of room for improvement. Our survey, which is quite comprehensive, is actually also looking at the linkage between financial literacy and financial resilience. And clearly, there is a very strong correlation between the ability of individuals to weather financial shocks and their level of financial literacy. So typically, people with higher level of financial literacy will be much more able to weather financial shock. So here, quite important in terms of what we're experiencing with the crisis. So we have actually developed a lot of work in the last 2 years on financial resilience. This is actually a report that we produced for the G20 Italian presidency that is typically looking at how different types of individuals and households have weathered the financial shock of the pandemic. It has been mentioned already, some particular groups were more affected by the pandemic, and young people were mentioned, women were mentioned. I want to mention here also micro and small entrepreneurs. And I also want to mention, I don't think it's been mentioned yet, but obviously the pandemic had a very strong impact on migration and remittances. And I think if we're speaking of the EU zone, this is something that should be mentioned. This report is quite comprehensive with some kind of recommendation at the end on what is the way forward in terms of supporting the financial literacy of adults through a digital means. So again, coming back to the digital solution, but in order to improve financial education. So there are some good case study here for those interested in examples that are actually evaluated in terms of their impact on the financial literacy and well-being of adults. So a little bit on the background, I'll be very brief. As I mentioned, most of the work on financial literacy is actually developed within the International Network on Financial Education, 130 countries and economies, so much broader than the OECD membership. We are really focusing on collecting data because we do believe that without evidence, we cannot really target the main needs and challenges that the population is facing in terms of financial competences. Then we are pushing for national strategy for financial literacy and looking at really main trends, digitalization, financial resilience, sustainable finance, as well as looking at some target groups. We are also lucky enough to be now coordinating for the last 2 years the Global Money Week. And of course, we are contributing to several global and regional forum, as well as partnering. And obviously, Jean-Paul is here for the IOSCO, but obviously we are partnering with the European Commission. And we are also actually dealing more and more with implementation, supporting regions, but also countries in developing effective financial education policies. So we are basing most of our work on a recommendation on financial literacy that was issued and approved by OECD governments and Brazil back in 2020 and recognized by the G20 last year. It is really a holistic approach to financial consumer protection issues, financial consumer issues, shall I say, really looking at the various aspects of financial literacy in the whole financial sector. So covering payment, investment, saving, insurance, pension. So quite importantly, it is really covering the whole spectrum. Again, focusing on the importance of having a coherent, a kind of consistent policies on financial literacy through national strategy. And the last part is really looking at effective delivery, because we know that the devil is in the details. And when it comes to financial literacy, as was said, it's a means to an end. It's not an end in itself. So we want to make sure that any financial literacy program has positive outcome on the target audience. And obviously, with this in mind, we don't only have a recommendation, we also have developed a range of core competency frameworks, which is looking at the different aspects of knowledge, behavior, and attitude that can form the basis of sound financial decision. As was said during the session, it is important to bear in mind that financial education is a dynamic process that occurs throughout life. So there are many opportunities in the lives of citizens to learn more about financial issues. And actually, as was mentioned by Commissioner McGuinness, financial decisions are really part of day-to-day life. So with this in mind, we have actually developed 4 frameworks on financial literacy, one for youth back in 2015, one on adults in 2016, and we also developed one on MSME, as well as one on investors with IOSCO. So now, obviously, we are very pleased, and we've been very pleased to work with the Commission on a revisited framework for the adult population. The starting point has been indeed the framework that was initially produced for the G20 for adults by the International Network for Financial Education, but really building on the announcement of the 2020 Capital Market Union Action Plan, which was integrating the development of a financial framework for the EU zone. So we've been partnering with the European Commission, but importantly with EU member states and also practitioners in order to make sure that the framework was really easy to use and actually implemented in a way that was, as was mentioned by Commissioner McGuinness, it's not important that we have a framework. What is important is that it is being used by various authorities in EU member states, but also by the private sector and the civil society. So what does it provide, this framework? It provides first a common EU-level terminology in terms of financial literacy and understanding of what financial competences mean in the EU zone. It is really aimed at supporting the development, implementation, and update of national strategy for financial literacy. And importantly, as I mentioned, it will be key in order to design, develop, and evaluate financial education programs. And of course, overall, we hope the outcome will be improved financial well-being for citizens in the EU zone. Here you have the overall architecture of the framework. So it is still looking at 4 areas of competencies. 1, money and transaction. And here, of course, we are looking at payment system. We are looking at money and currency, including cryptocurrencies, as was mentioned by Commissioner McGuinness. Second, we are looking at planning and managing finances with the different aspects of the personal management of finances, from budgeting to retirement to credit. We are looking at risk and rewards, very importantly, especially in a place in the financial space that is evolving constantly. Risk really need to be balanced with rewards. And last but not least, obviously, we are looking at the overall financial landscape with a number of competencies around regulation and consumer protection, scams and fraud, tax and public spending, and understanding what it means and why it is there, and also trying to make sure that citizens are aware of external influences that may actually push them into, for example, accessing credit that is too good to be true, for example. I am blocking my slides.
Yes, Johan, we can't see. So you're very clear in your presentation, but we don't see the slides scrolling down.
Now, are you seeing something, or?
Now we
I will continue and I will stop briefly. I'm sorry for all the technical glitches. I have to say, it's really not a lucky day for me digitally, but hopefully the coming days will be better. Just a few words to say that, importantly, the update of this framework has really involved to look at new competencies, digital financial competencies. I just mentioned crypto assets, but we also looked very importantly at personal data and personal data protection, and also looking at online scam and fraud. The second area of competencies that has been added has been sustainable finance, with, for example, competencies around the environmental impact of purchases, sustainability characteristic of investment products. We've also looked at financial resilience, and of course, I've also distinguished essential competencies from more expert competencies. As was mentioned during the panel, it is very clear that we don't need all citizens in the EU zone to be financial experts, but at the very least, we want them to be able to make a simple decision when it comes to financial product that they will encounter frequently, and also to know when to seek advice. So actually, financial advice was mentioned in the panel. Financial advice is obviously needed. What we want citizens is to know when they have reached the limit of their competences and they might need financial advice in order to make sound financial decisions. In terms of next steps, just to mention that obviously we want to support the implementation of this framework. We, as Commissioner McGuinness and I'm sure Tanya has mentioned, we are working with the Commission currently into the development of a financial competence framework for children and young people, again, in the EU zone. And as far as the OECD and its International Network for Financial Education is concerned, we are looking into updating our OECD toolkit in order to measure the level of financial literacy of the adult population, to integrate more digital financial literacy, financial resilience, sustainable finance, and financial well-being components. So we are aiming at conducting a new survey globally, but also in EU member states in 2022-2023. So I have finished my presentation, which I understand you were not able to see. I'm really sorry for that. I finished my presentation here. I would have been happy to take a question if there is time, but I see that we reached the hour. But anyway, it was very stimulating for me to hear from all of you, so I almost don't regret the technical problems. Thank you. Thank you very much.
Laurent, really on behalf of the 3 ESAs and on behalf of all the participants, really I want to thank you for taking the time, for being so clear in your interventions. It's extremely interesting for us to hear from you. I'm glad that you could hear also the insights from our great panelists. I also thought it was very interesting. I hope everybody enjoyed it as much as I did. We can still clearly see we are only on a journey, but I'm glad to see a consensus on the importance of this topic and how we can tackle it. So the second section of the day is going to tackle precisely what was mentioned by many people, financial education and digitalization. It will be moderated by my colleague, François-Louis Michaud, Executive Director of the EBA. But I think if that's okay with everyone, we're just going to allow a very short break. So just a few minutes so you can stretch your legs. And for those who are lucky enough to be close to a coffee machine, grab a cup of coffee. And we would reconvene, please, sharp 5 minutes past 4. Thank you very much, everyone, again, for your patience and your great insights.
Yeah, that's absolutely what he said to me this morning.
So welcome back to our 3 ESAs conference on financial education. My name is François-Louis Michaud. I'm the Executive Director for the European Banking Authority. And it's my pleasure to introduce the second session of the conference, which will be discussing financial education and digitalization, as we've heard already. That means that we will now be discussing, it's been exciting and very stimulating what we've heard so far, but there's even more to it. And now we are also going to discuss it in the light of the dark side of things to a certain extent, namely the cyber risks, the scams, all the fraud topics, which are also associated to the context in which we do financial transactions and financial investments and our financial consumption in a nutshell. We've heard that quite a lot, and I hope we haven't lost too many people after the break. The use of online technology and tools for financial services and transactions by consumers has skyrocketed in the context of the COVID-19 pandemic. It's been with us for some time, but what we've been through in the past couple of years has really given a new turn to those secular trends that we had been observing. So we've seen a major shift towards digitalization, with massive benefits, of course, involved, and a new way of doing things, which is much easier, much faster, much more efficient in many regards. But one shouldn't forget at the same time that there are also a number of risks arising from this new way of interacting and transacting. And this may bring, of course, a brand new range of questions and needs from a financial education perspective. So our session now will focus on the importance of financial education in a digital world, which means that we'll try to shed some light on the way we could and we should best manage the specific risks arising from financial services digitalization through financial education, and which is the form that the latter should take. I'm glad to also mention in the context of this panel that our 3 ESAs have established a common repository of national education initiatives in this regard. This was published earlier this week, and our repository references 120 such national initiatives exclusively focused on scams, on fraud, on cyber risks across the EU. And this comes itself on top of another 120 initiatives that are in the EBA's more general repository on education initiatives in the banking sector alone. So we are at a turning point, we believe, and our discussion today will support what we do at the 3 ESAs in identifying further actions in the field of financial education in the context of this digital world now we increasingly live in for our financial investments and transactions. Let me now turn to our insight speaker, Mr. Edvardas Sileris, who will introduce the topic of this panel with a speech titled Insights on the Rise in Inline Fraud and Scams. Edvardas has been the head of the European Cybercrime Center since July 2020. In that role, he leads the European effort to collect and to centralize criminal intelligence on cybercrime, supporting EU member states' investigations into online child exploitation, cyber-dependent crimes, non-cash means of payment fraud, and crime on the dark web, to name a few. Edvardas, the floor is yours.
Thank you very much. Good afternoon. I hope that you can hear me and can see me well, because I have realized that it was some issues with connection and possibility to connect. So I will try to share my slides and I hope it will work. I hope you can see everything. Okay, thank you very much.
This looks very good, thanks, yes.
Okay, thank you very much. So I would like to introduce myself as you did. So I represent the European Cybercrime Center at Europol. Europol is a European law enforcement agency. So our main role is to coordinate, to collect all the information across European Union, especially in area of cybercrime. And when it comes to today's topic, it's really important to mention that almost half of all cases in cyber area has some kind of financial aspect. It means that digitalization, internet supported very much accessibility and possibility to simplify all the procedures, but from the same point of view, actually, it's accelerated criminal activity online as well. So for that reason, actually, financial education and literacy is crucial for people, for society. And when it comes to cybercrime or crime in general, we have mainly two areas, is prevention and investigation part. And the best crime probably which could happen is that crime which has never happened actually in all the areas. So for that reason, education is a straightforward approach how to prevent crime in general. Here, what we see, we have main insights during the year. It's called Internet Organized Crime Threat Assessment. So we accumulate all the information what we collect during annual year. We share it with public. It's publicly available report, so you can download from our website. It's mentioned here. It's europol.europe.eu. And actually, it's a big part related to financial fraud, online fraud, modus operandi, how criminals interact, how they benefit from financial services, and of course, our advice is how to prevent these things. So online fraud is what kind of key findings we have found. Is, as it was mentioned by majority of speakers, COVID accelerated quite significantly cybercrime and especially online fraud. So it's nothing new. It's not only European dimension, it's a global trend from all over the world. And of course, I will focus on two main things, is phishing and social engineering. So it means that no matter that it's nothing very new, it has happened maybe since 2010, but it's same method. It means that social engineering people usually share their credentials, share their information with criminals by their own will without proper understanding what they are doing. And phishing, and of course, when you click some suspicious link without thinking that it will cause to financial losses, it will. So for that reason, what we see that possibility to obtain large amount of personal information from online. Actually, the last figure which I saw, it's more than 3 billion personal data records somewhere in dark web. it's possible to obtain. So it means that about every second person in the globe, you can have some information, or his or her email address, or some password, or some nickname, and through that you can be really successful in social engineering, because you will provide real information to possible victim, and then he or she can believe that you are a real banking authority or financial institution, and they can share all the necessary information with you. So human factor. When we assess possibility to break machine or to get information from the people, from human, what we see is that it's unfortunately it's not in favor of human. It means that we can be really easily misunderstood. We can be really easily caught by some interesting or attractive situations, and we can push the button, and based on that it could lead to losses of our financial assets. Two-factor authentication is real good, and from technical perspective it's almost impossible to break, but unfortunately people, they like to share this information as well. If you receive a code and suddenly after a few minutes you get some call from someone who introduced himself as a police officer or banking authority and to ask share same code, maybe half of population will do it, and unfortunately it will effectively eliminate this two-factor authentication benefits. So for that reason, financial education, I would like to repeat, is crucial thing. SIM swapping is also traditional method, and it depends on different countries, but it's really popular. So it means that, as I said, because it's not so complicated to obtain personal information in general, so same with phone numbers, and then in some operators it's possible to obtain duplication of SIM card, and then you can obtain this one-time password from different service providers, and then system will recognize that it's you as a real owner. So it means that a real owner will lose SIM card, and criminals will benefit from it. Am I a victim? So it means that what should I do, and to what kind of simple steps I should follow if I suspect something. So in case in good coverage area, not somewhere in the forest or the mountains, you will realize that your mobile phone doesn't work without any reason. So it's a really good trigger for suspicions. So it means that if you see that, please pay attention, and it's possible call to your internet or phone service provider just to clarify, maybe someone already is using your SIM card. And then of course, if it's confirmed, so block it, because otherwise actually you are potential victim. And of course, report to law enforcement if you have this ability. How to protect yourself? Technically, it's really easy 10 steps, but the main thing is all the time listen and all the time evaluate situation if it's something suspicious. Keep software updated, including your browser, antivirus, and operating system. So it's basic computer hygiene, but without it, it's almost impossible to be safe. Restrict information, and don't show everything on social media. Also, not on traditional only social media, but if you assess what kind of information there are on TikTok and all these popular social media platforms, you will realize that it's huge amount. It's not only photos of famous or lovely pet or cat, but actually all the, in many cases, also some financial information as well. Never open suspicious links or attachments. So it means that if someone shares something, please replicate this web address or link to your own browser, not just click, because in many cases, if it's link from Europol, it doesn't mean that in reality this link is from Europol if it's mentioned name Europol. In many cases, it's some fake links. So for that reason, please enter it one more time by yourself, and you will be relatively safe. Update your passwords. Actually, you will be surprised how many people use simple passwords 1, 2, 3, 4, ABC, etc. So no matter that it's ongoing trend to warn everyone that it's not safe, but people are doing same mistakes all the time. Download apps from only official providers, and always read the app's permission. If this app controls your web camera, keyboard, or microphone, and it's not necessary for services for which this app was downloaded, don't download it, because actually it could be malicious app, and it could cause also some huge damages for you. Of course, change pin. It's also really easy, 1, 2, 3, 4, not 4 zeros, not 4 threes, etc. So something that you can remember. And check your financial statements as well. Just for illustration, I want to show a few successful law enforcement operations, and just to illustrate possible financial damages and losses, what could cause this kind of scams. So it was one operation, so-called Secreto, its code name, and supported by Europol, led by Spanish National Police and US Secret Service. And it was network. Its damages more than 12 million euros, and it's acted intercontinental, so it means not only within European Union, but with US authorities as well. So it means that it's not only single criminal who are able to operate, but actually it's organized crime who realize that it's relatively easy to gain huge amount of money without really big risk to be caught. Same here, it's also Romanian nationals were able to hijack some identification app used by Baltic banks. And it means that it's not only social engineering or simple phishing, but actually in some cases, criminals are able to break some encryption and to duplicate a real software used by banks. But as I said, it's highly unlikely compared to social engineering and compared to regular simple phishing emails. And it's almost final slide from my side is driving license. So it means, what does it mean? It means that we need to have some kind of driving license for financial services to be aware of all the risk, to be resilient in possibility to be hijacked virtually. So it means that if someone sends code, so it's not necessary to push this link and to push this button. So it means that we need financial education, how to invest, how to operate with your money is crucial, but at the same time to implement some security standards, not from technical side, but to know how how they need to be used by consumer, because otherwise, no matter how much banks or a financial institution will invest, without proper knowledge how to use these tools, we will not be safe online. So the final words are same. So please be cautious, and financial education and literacy is crucial for everyone in this digital world. And if you would be more safer, so we would get less job for law enforcement. So thank you very much.
Thank you so much, Edvardas, for this very nice framing of the conversation and reminding us about what you called basic computer hygiene. I think that's really important. I think we're touching here on the nexus between also protecting oneself and still identifying oneself. So we are always faced with this sort of trade-off. It's very much like in financial contracting. What are the right signals that we should be sharing with the other party? And it's difficult to know at times, what's absolutely necessary for us to share to get access to something, and whether this might endanger what ourselves in the near term. And it's of course, I mean, there is a tendency of us being dragged into sharing more and more. Even that's not absolutely necessary for the type of financial services we'd like to get access to, because there are also side positives for the provider. So it's difficult for us to know where to stop and what's the trade-off between short-term convenience in getting access to some financial services versus the longer-term dangers of doing so. But thanks a lot. So really, thanks a lot for reminding and explaining those basic principles. Let me now turn to our distinguished panelists, going into alphabetical order. So let me start with Fiona van Eschelpel, who is Deputy Director General in the Directorate General Market Infrastructure and Payments at the ECB. Then we have Maria Lucia Leitão, the Head of Banking Conduct Supervision Department at the Central Bank of Portugal. Wim Meijs, the Chief Executive Officer of the European Banking Federation, and last but not least, Martin Schmalzried, a Senior Policy and Advocacy Manager at COFAS Families Europe, where he's also responsible for financial services, and Martin is also closely involved in a number of EBAs and EIOPA's stakeholders groups. So welcome all, and many thanks for joining our panel conversation this afternoon. Thank you very much, Fiona, Maria Lucia, Martin, and Wim. If you allow me, I'd like to structure our panel discussion into 3 successive rounds, and we'd like to touch first on the key challenges for each of you. What are the top of the pile challenges? What is it about strong customer identification? Have we done enough? Should we do something else? And what are the trends we see in the context of cyber threats, fraud, and scam? We'll go into 3 rounds, and we'll also take a few questions at the end of each round. And we'd like to first start with the very first question, which is, what do you consider as being the most challenging issues now when looking at financial education through the prism of cybersecurity, scams, and fraud? And what could be low-hanging fruits to overcome those challenges in your perspective? So please don't list too many things, but just come up with really what are the top 2 to 3 to 4 things that keep you awake at night in your respective fields. Of course, we'd like to touch on consumer attitudes and behaviors versus fraud and criminality patterns. Martin, let me start with you. Can you share with us a little bit of the research and what you see in this area?
Thank you very much. So thanks for the invitation. Can you hear me?
Very well, thanks.
So it's always a pleasure to contribute to the discussions. So just a little quick point here. In terms of financial education, I'd like to sort of put it in a broader context and how finance is perceived by the general public. And if you take 2 popular movies like The Big Short and The Wolf of Wall Street, what you get from these as far as insights into how finance is perceived is that in the finance world, it's so obscure that even the experts don't really understand it fully. So good luck for consumers to understand it and be educated about it. And even those that understand it sometimes profiteer from the gullibility of consumers. That's, The Wolf of Wall Street, that's basically the scenario. So that's already a bad start. And you know that on the consumer scoreboard, finance always scores the lowest, typically. And then there's an issue of terminology also. We're talking about financial education as opposed to other things like budgetary education. And there's some nuances where on the one hand, it's about managing your finances responsibly, which is really basics and really important. And sometimes financial education comes across as implying that you have to have some kind of technical knowledge about the products or about the financial system, which may be very complicated for people to leverage. Then there's the question of balance. So I like to use the example of a minefield. If you have a minefield, where do you invest most of your efforts? In removing the mine from the fields, that is basically regulation and all that, or educating people to sort of navigate through the minefield without being blown up? And of course, it has to be a balance, but just having to sort of underline that is really important. Now, in terms of cybersecurity, I think that the core aspect I want to underline here is the issue of trust. So in physical shops, there can be manipulation, of course, but consumers typically have a good intuition as regards the likelihood of being scammed in a shop, like in a big Apple store, you know, maybe the probability is very low. But when you buy sunglasses on the corner of a street from a guy that just has them stretched out on a piece of cloth, you kind of have that intuition that, hey, this is a bit less safe than if you go into the official shop down the main alley. But online, it's not really easy to make that distinction. So maybe one suggestion is, could the metaverse be a solution where you actually have to have a virtual physical equivalent of a shop, but you have to actually pay as you would buy, you know, a real property to open a shop in those kinds of settings. Whereas, you know, websites or even groups or accounts on social media, it's so easy to create fake ones. It's also very easy to make fake emails. So all of that is a big obstacle. And to overcome these challenges is not easy. One way is to try to replicate the offline trust into the online world. So for instance, there's an open source protocol, it's called the Web of Trust, where basically, you know, you can create a network of trust where people vote for other people that are trustworthy and they can vote for other people. And so you have a network that sets up where you can actually see who voted for whom and the likelihood of, you know, like a consolidation of businesses that are deemed trustworthy via that kind of network. So there are other components that are often ignored online. For instance, in the offline world, people have an intuitive knowledge about how safe their house is, whether their locks are hard to pick or whether they take care in hiding valuable objects from thieves. Online, it's virtually impossible for people to know if their operating system is safe, what is their probability of being hacked. In other words, we need to also focus on the vulnerabilities of the digital devices people use. Finally, I'd like to, you know, just have a general point about prevention. You know, you have this tendency where you have a problem, you create a solution to that problem, and then you have multiple problems that stem from that solution. And if you do that long enough, you don't even know what the first problem, the initial problem was. And the elephant in the room in terms of cybersecurity scams and fraud is social and economic problems. So there's this security researcher, I asked him, you know, did you ever bother to find out what is the motivation of hackers? And he said, actually, I did. And he has this story about one hacker that responded. He said, look, I'm just an African guy that has a lot of skills, no job, and a family to feed, and that's how I get my revenue. So it takes time and effort to scam people. And if you have access to a stable revenue, you wouldn't put all that effort and take the risk to scam people. So all that money that we spend on trying to catch scammers, prevention, and everything, maybe it would be better spent on, you know, trying to solve the underlying problem of basically just poverty. And that's especially prevalent if you have people that are starting to be more and more educated. Now, knowledge and education is spreading everywhere. So everybody can get degrees in computer science, but there are no jobs for many of these people. And so that's just a big problem that's going to blow up even more. Like one example of how we can prevent hacks is, for instance, generalizing contests for hacking with high payout to improve security. So for instance, you know, sometimes you have these contests where you're saying, okay, if you manage to hack this software, you get 100,000 euros. And I think that's a very good practice. And I'll finish with a joke and then maybe we'll dig into more issues later. On this big data center, there used to be a paper right on the glass and then behind you were all the machines and the cables. It said, in case of cyber attack, pull cables. So that's just to say how even like these technicians and the experts, ultimately the best protection is just to unplug everything. And that's one of the obsessions of centralized control that creates many problems in cybersecurity. So the best protection sometimes is to try to shift offline what we're trying to always put online. So you can't hack a physical euro bill. And you have the example now of, well, the digital euro is being developed, and they're thinking about a way that you can pay from one phone to the other without having to actually go through the internet. It's like wallet to wallet via Bluetooth or some kind of more local connection. So the balance between needing to be absolutely connected to, all the time and actually doing things offline has to be much better managed. I think that's also a big solution there. These are the general points that I'd like to raise. Thanks.
Thanks, Martin, for those insightful remarks. I think this on-offline balance is an interesting point, and also what you were saying about the trust and the fact that we need certification also in that sense. It's very much like in financial intermediation in a way. We need some intermediaries who can also provide the trust to the system that's needed. So, and I guess platforms of that kind or networks, as you say, can play that role. But that, thanks a lot. Let's continue maybe with you, Fiona. Could you tell us how this topic is getting attention at the ECB? Also in the light of your mandate at the ECB, which has of course its limits, right, or limitations.
Yeah. Indeed. Thank you very much, François-Louis, and delighted to be here this afternoon. Indeed, as you rightly hint, our mandate doesn't really extend as far as consumer protection, but still what we do here at the ECB in our actions, we do try to direct ourselves in a way that consumer interests are nonetheless protected, be it through the work we do in terms of imposing standards on payment service providers, on payment schemes and arrangements, or through the many different work streams that we have in the area of cyber resilience for the financial sector more broadly. What we see is that the way the public interacts with financial entities and the way the public conducts payments in everyday life has greatly transitioned to the digital realm in the last few years with the advent of technology. And as Edouard has mentioned, this has been particularly the case, of course, with the pandemic environment that we've been in for the last couple of years. Unfortunately, many users may be unaware or maybe not fully aware of the risks and the capabilities of cyber criminals. And due to the nature of technology, a simple almost may result in non-negligible financial damage for a consumer. And IT literacy and raising awareness and having more requirements around cyber hygiene, this is and will continue to be a challenge, not only for older generations, but in fact for everyone, given the prominence technology has taken in our everyday lives and given the advancements that we see with technological change and innovation. And at the same time, attackers, scammers, fraudsters, they also evolve and they change their methods also very quickly. And if they see something is not working, they switch to something else. If they identify a new gap that they can exploit, they quickly adapt. And the criminals show no mercy, of course, when it comes to treating individuals as targets. This was evident also in the pandemic, where scammers took advantage of the fear that people had around COVID-19 and tried to lure them with malicious emails in that direction. So educating consumers about cybersecurity, about scams and frauds is something really that requires continuous effort. And with the level of sophistication of fraudsters, it would be impossible for consumers to remain abreast of all the developments in this area in an ongoing basis. So therefore, this is where it's important that central banks and other authorities such as the EBA also play a role when it comes to the payment space and ensure that the payment service providers take the necessary steps to enhance cyber resilience and avoid possibilities for scams or frauds to take place through the payment services that they provide. Now, of course, this is easily said, but outpacing malicious actors is not something that's easily done. And it's not a task that an individual financial entity can do entirely on its own. It really requires collective action too. And on the side of the ECB, we channel our efforts through various activities, through our work as a payments overseer, in the work we do together with the EBA and national authorities through the Secure Pay Forum, the security on electronic retail payments, and also the work we do on the side of the ECB and with national central banks through our cyber resilience strategy, where we try to enhance the resilience of individual firms, of the financial sector, and also where we try to engage in strategic dialogue with industry, including payment services firms, to try to advance cyber resilience in that respect. So through all these efforts, we aim to have the right conditions for the secure provision of payment services to consumers across Europe. And this is something we will continue to do. We keep ourselves also abreast of the changes that are taking place in the space. And we absolutely have to keep pace ourselves too with these developments.
Thanks a lot, Fiona. And listening to you, I also, I'm reassured we still have a mandate. It's not only about consumers doing their hygiene, basic hygiene, and to take the analogy that Martin was taking before, it's really the fact that we have the minefield. I think image is a very good one indeed, and we have this double effort to pursue, whereby we remove as many mines as we can, but we also learn how to best behave and how to make progress. But listening to you, I really understand that we have a lot to do. You have a lot to do, or central banks and overseas of payment systems, to make sure that the infrastructure is strong also, and that the gates are well kept, and that there are a number of safeguards for the consumers, even independently of what they may choose to do. So there is a lot to be done in that space, I understand. Thanks a lot, Fiona. And if we continue in that direction with you, Wim, Wim, banks have been traditionally at the center of course, of those topics, right? I mean, financial intermediaries are here for a reason. How do you see, how do your constituencies see their role in this regard? Do they find that they have a lot to do to raise the level of financial education in the context of their digitalization efforts? How is it discussed in your circles?
Thank you very much, François-Louis. And indeed, if you talk about this, the banks have traditionally, of course, it's where the money is. So of course they've been attacked. So if you first go to the resilience of the system, then of course banks from the moment they went online were interesting for advanced criminal gangs. Now the pandemic has shown us that the resilience of the European payments infrastructure is excellent, and we have you to thank to that. We have ECB to thank to that. But I'm also very grateful to Europol for their continuous effort to not only make aware, but also actually unite people also in following up. Now, but that's one part. So the first thing that we need, and the first thing that we always discuss, is this is not a matter of competition. If the resilience of our payment system is attacked, if it has leaks anywhere, it is a disaster for all of us. So by working together, not only among banks, but helping banks, IT investigation, also helping each other, but also by closely aligning, as Fiona said, with the ECB in a continuous dialogue on cyber resilience, and by setting the rules. This is the first part of what we have to do. Now, of course, indeed, we saw in recent years this huge amount of volume of online payments, and also wider use. People who have not been online went online, and you see it in clients everywhere. Clients of banks do not want to go to an office anymore. They want to arrange things online. Mobile apps for banking are very popular. That of course means that you need financial education skills, and indeed, if I refer to the excellent opening speeches, it shows that we clearly need realization on financial education, because it's a life skill, but that comes immediately together with digital skills. Digital skills are also a life skill. So it is the two of them together. Because indeed, during the crisis, what we did see were attempts to attack I would say the infrastructure, but much more successful, and that was and much more dangerous, was the social engineering, and that was all what Edvarda said. And indeed, it is the behavior of people that we need to help. And there's a role not only for the public sector to inform, to help their clients, but also for the private sector, because indeed we are client facing, and it is part of creating with digital solutions also help with tools and awareness of the related risks, because indeed cyber hygiene is not as up to the task. So we need to deal with this. And it is actually, as Her Majesty Queen Maxima says, we need to do that at all levels and continuously by raising awareness, developing tools, helping, and as many interventions as we can do. And for this, there is public-private cooperation that works. I'm particularly proud of our cooperation with Europol, where we have a huge cyber awareness campaign, because again, it's public, it's private, and we have the knowledge and we bring it to people. But there are many others out there. And the moment of contact is always indeed, where can we help? Where can we deal with it? And you see that different age groups need different approaches. Children that they often call digital natives are so used to digital means, but they are not so used to the fact that their money disappears quickly in an online environment. So there, the mix between, I would say, risky behavior on one hand, and on the other hand, financial education is slightly towards the financial education. Whereas the elderly, who are usually very good at budgeting and dealing with their finance on one hand, need more help in an online environment. And so there we can organize courses for the elderly. You can deal with these things. And again, it is mostly through national strategies. It's mostly through public-private partnerships and through conferences like this that bring us a long way. And if I may congratulate the ESAs with your financial education and digitalization initiative and on the repository that you mentioned yourself. This is a great way forward because we need to learn from each other through best practices. One of the things is that it needs to be continuous, it needs to be about awareness, and it needs to be about balance between a high level of consumer protection on one hand and other continuous awareness. Now, if you know indeed the amount of data that are being gathered, that are being captured, it is very important that we constantly remind and help people in different ways. We are currently organizing the European Money Week, for instance, that is closely connected to the Global Money Week, in which the theme will be supercharging financial skills, by which I mean exactly the theme and the important theme of discussion today. In other words,
can I ask participants to mute their mics, please? I think we can you please? Thank you very much.
That brings me to my conclusion. This is literally taking cooperation and dialogue, I would say, but very important. It is. So to conclude, very important that we realize cybersecurity and financial skills go hand in hand as life skills. There is a strong duty for the private sector to help and raise awareness and develop understandable and safe tools, but this goes in close cooperation with the public authorities.
Thanks a lot for your remarks, Wim. I think this is really important what you were saying also, that this is not a matter of competition. There is a public good behind all those things, and indeed the knowledge in IT matters goes hand in hand with the financial skills, of course, and so there's a good deal of things to be done both by the private and public sector. Turning to you now, Maria Lucia, how do you handle that from a conduct supervision perspective?
Thank you for the question, and thank you very much for having me today. Hi, everyone. I would like to start by mentioning that the Central Bank of Portugal has a clear mandate on banking conduct supervision. We started implementing banking conduct supervision on a very comprehensive way in 2008, and we have 3 pillars: regulation, oversight, and financial information and financial literacy. And we have been implementing financial literacy since 2008, and in 2011 we joined other supervised authorities, and we are now leading our national strategy on financial literacy, also with support of public stakeholders and private stakeholders. And one of the stakeholders we work with is the Portuguese Banking Association. But let me focus on the question of, I think, of this panel, and to mention the challenges that we face. And the challenge is to increase digital financial literacy and to make consumers aware of cybersecurity risks and to have them adopting strong customer authentication and safety procedures. is a very complex task. We have been implementing a set of initiatives since 2016, immediately after DBA issued those guidelines on payments on internet and calling the attention to the adoption of safety procedures. And we have been also taking some important initiatives closer to the very important dates related to the adoption of strong customer authentication, September 2019, end of 2020. And take into consideration all the work we have been conducting, I would say that we have two greatest challenges, urgency and massification. Because we need to work very quickly to increase the level of digital financial literacy of the population. And I speak based on data we also collected on our last survey on Portuguese population. We asked questions related to the level of digital financial literacy, and we know that we need to work very hard. We as Bank of Portugal, and we as leaders of national strategy in Portugal for financial education, and we need to try to massify those initiatives. But at the same time, we need to prepare specific initiatives according to the different segments of population, because we need to reach all the population, but population is not homogeneous. It's not it was already mentioned by Wim that we have on one side the youngsters, tech savvy, but overestimating what they know and underestimating the risks. And on the other side, we have the senior, not yet confident enough to be very active using digital financial services. Then this homogeneity is quite complex. And when we speak about financial literacy, we know that we have to take us into consideration knowledge, attitudes, and behaviors. Then we need to make people aware of the rules in place and the way they should mitigate those risks when going online, going digital. But we need also to change attitudes and behaviors. And very often, it was already mentioned, what is difficult is to persuade customers to be informed, to be aware of those risks, and to actually conduct those safety procedures. And we have been trying to prepare different training materials according to these different profiles. It's not an easy job because we have to translate in a very plain language, very often complex terms. And ourselves, we need also to get support of cybersecurity experts, because these risks, they are evolving, they are getting more and more complex, and we need to translate those risks in a very clear way. And we need also to have a very, very specific, I would say, communication strategy, because we need to reach these different segments of population, and obviously to massify the initiatives, so we can rely, and we have been relying on social media. But on social media, we have also to compete for the attention of consumers, because it's an environment overloaded with information. And through social media, very often we do not change attitudes. We have been also relying on mass media, but it's very expensive, and we have been doing it only in very specific moments, like the important changes on SCA at the end of 2020. Then what we have been adopting is a complementary approach. Raising awareness campaigns, very often close to important moments all along the year. For instance, during spending Christmas season, I'd say, also in cooperation with other institutions, other authorities. For instance, during the European Cyber Month, October, we have been trying efforts to create and amplify our initiatives, meaning raising awareness campaigns is important, but we have been also implementing initiatives that we consider to be important to change attitudes and to change attitudes at a very early stage, as it was already mentioned this afternoon. And for that, we have been working with Ministry of Education. We have financial literacy in Portuguese curriculum already in schools, and we published, for instance, a financial literacy workbook for secondary students last October, with support not only from Ministry of Education, but also from the foremost relevant financial associations, in which we included a chapter on cybersecurity risks, obviously with examples and trying to bring some situations very often very well known from students, but through those examples, trying to also call the attention for safety procedures, for precautionary procedures, and so on. Anyway, I think the challenges we have are very complex, but we think that we need to hurry up to face the challenges of a growing environment where everyone has to more or less rely on digital financial services, but an environment where also the cybercrime is getting complexity, growing in complexity with automation, with AI being used and so on. Then I think, as it was said, with support from EBA and other ESAs, is very important to learn from each other. But I'd also mention that we have been learning a lot since 2008 from the OECD INFI, and we are now very, very happy to have this financial competence framework for adults, in which we have, let me mention, 10 competencies related with fraud and scams that we need to take into consideration when implementing our digital financial literacy initiatives. Thank you.
Thanks a lot, Maria Lucia. I think we hear a lot. We hear you on the urgency and massification, and also what you say about its massification. And at the same time, we need to be targeted in terms of the segments of the population we want to address. And I guess that goes back also to what Wim was saying before about those private and public partnerships, because they have, of course, excellent information at banks about the behavior of certain types of customers. In the same way, ECB also has a specific, oversight of practices over there, which can be beneficial to other actors. So I think that's really helpful. Let me move on now quickly to the second round, which will make it quicker, I think, because it's more targeted also. It's on the topic of payment fraud and what authorities have been doing to try to reduce payment fraud with what we call the two-factor authentication requirement, which has been imposed through the PSD2 payment system services directives in Europe, which requires all payment users to enter not only a memorized code, but also an additional one-time passcode produced by a card reader on an app a fingerprint or anything else that could allow them to identify themselves. So we tend to believe that it's a big plus now that we have this well spread in the system, but there might be other things to do, and there might be different views on how this has been working so far. Could I ask you, Fiona, maybe to remind us about the rationale for this initiative in the first place, and also your views from your ECB window as to whether this strong customer authentication had the desired effect so far?
Okay, thank you, François-Louis. Indeed, would remind that the policy rationale behind strong customer authentication was really rooted in the need to increase security and to reduce fraud. And in particularly at the time that this was talked about, we had seen a big advancement or an uptake in e-commerce and online transactions. So it was very much something in the moment. And here at the ECB, for many years, we have been producing card fraud reports and doing a lot of analysis on that. And in a sign of the times, I think the card fraud report is one of the most read publications that we have here at the bank. Now, of course, there is a bit of a time lag when it comes to producing data. And the last report that we published, I think was October last year, was only up until 2019, including data for 2019. And what we saw on that was that for, let's say, 100 euros worth of transactions, there were fraud of around 3.6 cents, which is quite high. So across the single euro payments area, or 3.2 cents per 100 euro transaction if we're looking only at the euro area. So a lot, billions in fact, of euro are lost to consumers every year through fraud. So this was really something in the minds of the legislator with the intentions in PSD2. More recent data, there was a report published by the EBA, by yourselves, Francois, there a couple of weeks ago, based on initial data that we start to receive under PSD2. Now, the report, of course, cautions in terms of the data quality and some limitations, but still, we have data that shows that SCA is working. What we see in that report, and it's available on the website, is that the figures for when transactions are validated without SCA, the fraud rates are 5 times higher. So this is quite telling, and or to put it the other way around, 70 to 80% lower when SCA is used. So I would say that we are starting to see the signs that the investment in SCA is paying off and benefits are coming to consumers.
Thanks for reminding all this, Fiona. Before I move on to the other panelists, I'd like to invite the audience to respond to a short poll question, which will be put in the chat box, and then you could use it to vote. And the question is a very simple one: as a payment user, have you been sufficiently informed about why two-factor authentication for retail payments was introduced and how it would work? So you can answer yes or no, and we'll look at the results later. Wim, how would you see the success or limitations of this initiative from your perspective?
I'm just ever so slightly biased, but I'm a big fan.
You're a big fan, good.
Because seriously, I don't know if you remember when we all started working and the IT department tried to learn us about security. And so every month your email would stop working because you had to change your password. The amount of people that had the name of their dog 1, 2, 3, 4 up until 12 and then back again is huge. And so that is, I think, that goes to the core of the question, because measures in security should always be balanced with the ease of use. So I absolutely believe that strong customer authentication was the right thing to legislate, to make obligatory. But I also think that it was good that the European Banking Authority gave merchants a little bit more time to implement, because merchants weren't ready and needed, of course, to communicate with their clients. Because in my view, what is good about SCA is that it puts a two-factor, it puts a double factor that makes you think again, but also on more than one device. So it comes back to you in a way that helps. And I must say the same data that the ECB has, we have seen as well. The first indications are that there is a real lower level of online fraud because of SCA. So that is a very important step forward. Now, if we go forward and think about future legislation, we will always need to come up with new and agile approaches to make, on one hand, make it easy for the consumer, easy for the merchant, but also change to the realities of the market. Because indeed, what you see is that, and that was said earlier, is that the online fraud becomes ever smarter and is very agile in its new methods. Another thing that was important, I think, is that is to always, again, I come back to my point on awareness. There was a lot of extensive campaigns by both public and private parties, and sometimes even launched by the national competent authority, about the awareness on and the risk of fraud and the importance of SCA. So the work obviously has to continue, but in my view, two-factor authentication has got the right balance between safety and ease of use, and has helped really physically to lower the amount of fraud.
Thanks a lot, Wim. Looking at the results, I'm a bit, wondering if we've done enough, or if simply you panelists are so captivating that they the audience even do not cannot be distracted for 1 minute to answer the poll. No, I think or maybe simply the issue is behind us now. And
most probably, François Louis, your poll is protected by two-factor authentication, and people cannot get in.
Anyway, so let's continue with that. And maybe Maria Lucia, could you tell us about how you think it's been working, and in your role as a consumer, banking consumer supervision authority, how do you go about the practices you see from the promoters of that, or from the financial intermediaries themselves?
Listen, first of all, I'm a supporter of strong customer authentication. Obviously, this two-factor authentication is very important. I've been trying to call the attention even much before it was mandatory here, obviously, at the Bank of Portugal. It's very, very important. And obviously, as a banking conduct supervisor authority, with working within those 3 pillars I mentioned, for instance, the regulation and the oversight, we, first of all, need to oversee the way the institutions are compliant with these technical standards, the standards being defined by the authorities, and also the exemptions and so on. And we do that namely through complaints handling, because all complaints related with the retail banking service, they come to Bank of Portugal. We are the authority with the mandate to manage and handle those complaints, and through those complaints we can assess the way institutions are effectively compliant with these strong customer authentication requirements. And the experience we are now having from assessing and analyzing those complaints is that strong customer authentication is not enough. Because when consumers give their credentials, when consumers, they get deceived by emails they think are from a brand or from a very entity they need in which they need to rely. When consumers are being deceived through social engineering, then if they give their credentials, their personal data, then there is no way. And we have some examples of complaints where the main reason for the fraud was the fact that the consumer gave all the information to the attacker, which means again and again, what is the topic of this conference, we need to educate consumers, we need to raise awareness of consumers, to call them to mitigate those risks, to be aware of those risks, and we need to implement digital financial literacy. And we at Bank of Portugal, we take that seriously. The promotion of digital financial literacy is a very important line of action of the Bank of Portugal strategic plan 21-25. And within different initiatives we are conducting, I would like to mention that we are now working since mid last year with the support of the European Commission and OECD in fee on the implementation of digital financial literacy for Portugal, in order to try to define a set of recommendations that may help us to help consumers, to educate consumers. And this is a task that we care a lot. Thank you.
Thanks a lot. Before I ask a question to Martin, I'm conscious of the time. So instead of the third round I wanted to have with the current trends vis-a-vis the threats, I mean, I'm going to turn to the panel and ask them for one initiative that they would recommend going forward, the one thing on top of their list that they would recommend either for the public sector or private sector to come up with in the short term. But now, before we move to this last round, Martin, for me, there have been a lot of discussions also about the fact that strong customer authentication sometimes was introducing new frictions for consumers. So it was well intended to protect them, but at the same time, that was also to some extent complicating the way they were, transacting. So what's your view? I mean, is that something that you would confirm? Is that also a way of keeping some of the new entrants at the gate? What would be your view on that? Very briefly, if we can, because we need also to close the panel on time, even though we started slightly late.
I actually had the similar remark to Maria Lucia. I mean, if the consumer is convinced by some attacker that they need to give their credentials, then 2FA doesn't help, that's for sure. There's one issue is potentially having two-factor authentication on the same device. If the device is compromised, then it's useless, of course. If you lose your phone, you don't have it protected, you have your two-factor authentication app on it, that's problematic. The transfer of two-factor authentication from one device to another is not easy by any standards. You have to store a QR code somewhere. Maybe you're not good at storing it. You put it in your emails, or you have it on your computer somewhere, easily accessible. The digital skills to use it is not easy, because if you have all your apps password protected, the sensitive ones, then in order to switch between two-factor authentication, your apps and everything, encoding the codes and everything, it takes some skills. And for those that don't have a smartphone, as Vinay put in the chat, there is a risk of exclusion from that kind of extra layer of security. Now there are certain solutions that can be had, like for instance, increasing the social security nets. For instance, you have now new systems where you can appoint several number of people that you trust that act as a sort of a filter in high expenditure. Like if you spend more than this or that, you have to call up a friend, they put yes on their phone, and then it unlocks your spending levels. But in general, it's a problem with passwords. We were talking about the names of your dog, 1, 2, 3, 4, 5, and all that stuff, but passwords are a nightmare. If you think about it, I mean, you have notifications of some of your passwords being compromised because one or the other website that you use has been hacked, and you have to change your passwords all that often. How many passwords do you think you can actually remember that are complicated for all your services? If you use the same password for a regular shop as you do for your email, if that password is compromised, the hacker has access to your email, maybe he can reset your 2FA and actually get it like reset so that he can take it over. So I mean, this is a much bigger problem than just 2FA. It's also the fact that even the current systems with passwords and emails and all that stuff is just way too complex for consumers to handle. I mean, the average user, especially at a certain age, cannot keep track of more than 2 or 3 passwords at best. And changing them every year is a nightmare. And they're required to do that anyway. So,
thanks. Okay, I think we share. I mean, many of us, we would certainly share your view, Martin. May I ask you a couple of words? So, I mean, from each of you. So, what would be the one initiative you would recommend going forward? But please be concise, 2 or 3 words maximum. Fiona, starting with you, please, if anything.
Yeah, maybe enhanced monitoring tools, something to try to reduce application fraud on the side of payers and pays. This is something that could be looked at going forward. Enhanced
monitoring tools, excellent. Wim?
I'm a big admirer of Europol and their work. So I would say the Europol EBF awareness campaign that has been running for some years, and the cybersecurity month that also has a lot of attention.
Excellent. Okay, thank you, Wim. Maria Lucia, what would you recommend?
To complement regulation and oversight with digital financial literacy, targeting all the population through different stakeholders, using specific materials and developing awareness. Thank you.
Excellent. Martin, the last word.
I would say with all the data that consumers generate, to leverage that in their interest and not against their interest. That is, you have artificial intelligence that can monitor your habits, your behaviors. If anything is out of the ordinary, like for instance, if your mobile phone suddenly appears 200 kilometers from where you were just a minute ago, that is a sign of fraud, and that should be picked up. There's technical means that you can do that, and that should be how consumer data is used.
Thanks a lot, Martin. That's more than 2 words. Many thanks to all of you, Fiona, Wim, Maria Lucia, and Martin, and Verena. My apologies for being slightly late on schedule, but I think it's been a fantastic and fascinating panel with excellent messages from our panelists and also our inside speaker first. So with this in mind, let me again thank them once more and turn it over to you, Verena. Thank you.
Thank you. Thank you, François-Louis.
Very much.
Thank you very much. Thank you, François-Louis, and thank you to the speakers of the last panel. My name is Verena Ross. I'm the chair of ESMA, the European Securities and Markets Authority, and I have the honor of giving some concluding remarks, standing between you and hopefully a nice evening. But I want to really say that it was a very intense and rich afternoon with a lot of discussions and exchanges, and I want to warmly thank on behalf of all the 3 European supervisory authorities our important and distinguished guest speakers, and all of you in the audience who have engaged actively, particularly through the chat. We had impressive keynote speakers who kicked us off this afternoon and really gave us, I thought, an inspirational start to looking at the wider picture of consumer finances and how important financial education is. We heard that financial education is an important starting point that can encourage people to save and invest long term. Indeed, people who are financially literate are more likely to understand, ask the right questions, and take advantage of the possibilities that are provided by the financial markets. Supporting citizens' engagement and trust in the financial system in Europe will in turn help us to build the capital markets union, as the first panel showed. We also heard that financial education by itself is not enough. We also need strong investor protection requirements to ensure fair treatment of and good support for all customers. Good examples of critical financial education initiatives have been presented today at the global level with the launch of the competency frameworks for adults developed jointly by the Commission and the OECD, at the EU level and at the national level. From the second panel, that focused on digitalization, I think what came out of that was reminding us that digitalization is rapidly transforming financial services, from the way in which customers and financial firms interact with each other to the way in which financial products and services are being designed and manufactured. COVID-19 has further contributed to this trend. Digital technology has also changed the way financial education needs to work and creates different communication means and challenges with retail customers on the ground. I think what is clear is that digitalization brings a lot of opportunities, but customers and consumers should also be aware of the risks that new technological possibilities bring, in particular, cybersecurity, scams, and fraud risks. We heard in the second panel this afternoon about these risks and what is being done to protect financial consumers, and also from Europol what we can do to protect ourselves. In conclusion, I would like to thank again all the participants for attending this first day of the joint ESAs high-level conference on financial education and literacy, and I would like to thank all the speakers, panelists, and everyone else for their precious contribution. It has been an extremely insightful discussion. On behalf of all the 3 ESAs, I would now close this first day of the event, which will continue tomorrow, and that will cover critical topics for financial education and its role in the context of the financial resilience of vulnerable groups and in relation to sustainable finance. The discussion will continue tomorrow at 2 p.m. And once again, many thanks and have a very good rest of the afternoon and evening. Bye-bye.
Thank you.
Thank you.
Bye, everybody.
Bye-bye. Thank you.
Bye-bye.
Okay.